Come on, Sean, you're walking now. Come on, Sean, quit your belly aching now. Hello, everyone. This is Dick Lucas, and this is Shooting from the Hip number 7. We got a good show today. We're going to riff on Howard Marks' memos. I covered a lot of his memos. We're going to riff on. He's got a good look on what the markets are doing. We're going to talk about how to avoid Zoom calls for fun. We got some fun sprinkled in here. We got some positivity from Mr. Money Mustache, what to do with your money, remain calm. Tools are in place for an uncensorable internet. We're going to talk about what that means. Balaji Srinivasan. He's talking about there's no back to normal. We're going to talk about what that means given the whole pandemic. Working from home, Benedict Evans on the consumer habits we create now that may last. Telling tweet from a legendary investor, Marc Andreessen. We've talked about him on the show before. This is from 2014. Telling, given what's going on now. We're going to take some questions and comments. So we got Charlie, as always, in the chat. He's going to be moderating all this stuff. We haven't had any trolls yet, unfortunately. It means we're not big time enough. But if you have any questions, comments, tell me I'm wrong. Fact check me, please, because that's only going to help the show. So we'll address those at the end of the show. Charlie's going to compile them, and oh shit, we got a bug. He's going to compile that, and I'm going to get to them at the end of the show, but not during the show because I want to keep the riff going. We got 18 pages of notes right here. We're going to try to get through them here. We do this every Saturday, noon Eastern, 9 a.m. Pacific. We got Charlie Finch Finley in the chat. He's the producer. He edits all this stuff. We got your boy Dick Lucas here. I got a shout out to Bobby 2 times. Best roommate a girl could ask for. It's his birthday today. I think he's like 38 or something. We love you, brother. Hyde House shout out, respect. Okay, we're gonna get right into it. We're gonna start with, and I didn't say this in the intro. We're going to start with, oh, by the way, this thing I'm wearing, this is not an official CDC mask. This isn't for anything. This was friend of the show, friend of the podcast, my brother, my cousin, Jonathan Healy. He sent me this after the last show. Last show, we had some bug issues. So he sent this to me. I'm wearing it in solidarity. Thank you for the support. We appreciate that, Jono. God bless your twins. Love you, brother. Okay. So we're going to start out with talking about the mask situation. I'm going to go back and we're going to look at some of the previous comments that people had, some of the CDC comments. We're going to look back at what the Surgeon General was saying. So let's see. We got Ben Thompson had a post. He writes for a publication called Stratechery. Again, most of the stuff in this show, basically all of it, all these 18 pages of notes are things other people have said. I'm looking at what smart people are saying on the show, and I'm going to tell them to you. I'm going to distill it. I'm going to give you some color. I'm going to add to it, give you my hot take on it. But I think half the battle in this information overload age where, facts are commoditized, it's finding the right sources. I really, truly think that's half the battle. So for me, the value prop of this show, what I try to give you is looking at who are the people we should be listening to, and then I boil that down, and then we riff on it. So that's pretty much the goal with the show. Okay, anyway, so Ben Thompson writes for Stratechery. He had a post on March 31st, 2020 called Unmasking Twitter, where he quoted some of the tweets from previous from the World Health Organization, the CDC. Let's start with this. So this is the World Health Organization on May 1st. It says, when to use a mask. If you are healthy, you only need to wear a mask if you are taking care of a person with suspected coronavirus infection. Wear a mask if you are coughing and wear a mask if you are coughing or sneezing. Okay. This is CDC from March 28th, 2020. If you are sick, you should wear a mask if available when you're around other people, including before you enter a healthcare provider's office. If you're caring for others, if the person who is sick is not able to wear a mask, for example, because of trouble breathing, then as their caregiver, you should wear a face mask when in the same room with them. Visitors other than caregivers are not recommended. Note, during a public health emergency, face masks may be reserved for healthcare workers. You may need to improvise a face mask using a scarf or bandana. So the U.S. Surgeon General, we're going back again, February 29th. Again, this is before shit started hitting the fan. U.S. Surgeon General, the official Twitter account verified of the U.S. government. Seriously, people, stop buying masks. They are not effective in preventing general public from catching coronavirus, but if healthcare providers can't get them to care for sick patients, it puts them and our communities at risk. So then on March 30th, 2020, so a month later, the Surgeon General says, World Health Organization stands by recommendation to not wear masks if you are not sick or not caring for someone who is sick. Okay, so the latest from Surgeon General, and we're going to talk about the official CDC, what the official CDC is now saying, what their official statement is as of, I believe, yesterday on Friday evening. So Surgeon General said on April 3rd, in light of new evidence, the CDC recommends wearing cloth face coverings in public settings where other social distancing measures are difficult to maintain. Grocery stores, pharmacies, especially in areas of significant community-based transmission. So you can see how the narrative has changed, right? At first it was, and I do think there is something to it to tell people not to go buy a bunch of masks early on, because we need to save these for people that truly need them, healthcare workers. But then say that, right? If that was truly the intention at the beginning, which I don't think it was, and we'll talk about the CDC's official statement. I don't think it was some kind of way to trick people into saving money for saving masks for the healthcare workers. But they should have just been honest with the American people. They said, listen, don't buy medical grade ones. Like there's N95 by 3M. Keep those for the healthcare workers. If we do recommend that you make your own, and here's how to make your own. And the Surgeon General tweeted this out. They have a video with a couple. This will be linked. Also, I should mention, all this stuff's going to be linked. Well, not all of it. So if you want to get all the show notes, become a contributor on Patreon, $5 a month, support the show. But most of the links, or many of the links, the big ones, will be posted in the show notes once this is over. And this is also available wherever podcasts are available. So in the show notes there, and the show notes on YouTube, etc. So yeah, now they're recommending you do wear a mask. So I'm gonna cover the official CDC statement on this, because I think it's important, and I think it's important people hear the actual statement. So a lot of the times, again, I talk about this on the show a lot. A lot of the times you see, and this pains me. A lot of times you'll see articles about about statements like, oh, CDC issues new guidance, or some governing body issues new guidance, and then instead of actually reading the official text from the guidance, they'll do a description of it. A lot of publications do this, and that's fine, but I really encourage you to read the actual text. So what I'm going to do is read the actual text on the CDC website. Again, we'll link to this, and here it goes. So let's when I'm reading things, I try to go fast, because it's like, we don't want to get boring and I'm me just reading a bunch of stuff here. So I'm going to go a little quickly on this. So the CDC continues to study the spread and effects of the novel coronavirus across the United States. We now know from recent studies that a significant portion of individuals with coronavirus lack symptoms, asymptomatic, and that even those who eventually develop symptoms, pre-symptomatic, can transmit the virus to others before showing symptoms. By the way, this finger thing, I watch myself do this on the stream. Isn't this what Trump does? Like, so I'm just like, my fingers are together like this. I think I picked that up from him, and I don't know what it is, but it's, yeah. Anyway, I think that's what the deal is with that. Anyway, just, I can't stop doing it for some reason. I think I would like mock him doing it, and now it's just ingrained into my, it's definitely what he does. Anyway, we're going to continue with the statement. So, who eventually develop symptoms, so individual with coronavirus, so who lack symptoms, asymptomatic, and that even those who eventually develop symptoms, pre-symptomatic, can transmit the virus to others before showing symptoms. This means that the virus can spread between people interacting in close proximity. For example, speaking, coughing, or sneezing, even if those people are not exhibiting symptoms. In light of this new evidence, CDC recommends wearing cloth face coverings in public settings where other social distancing measures are difficult to maintain, e.g. grocery stores and pharmacies, especially in areas of significant community-based transmission. It is critical to emphasize that maintaining 6 feet social distancing remains important to slowing the spread of the virus. CDC is additionally advising the use of simple cloth face coverings to slow the spread of the virus and help people who may have the virus and do not know it from transmitting it to others. Cloth face coverings fashioned from household items or made at home from common materials at low cost can be used as an additional voluntary public health measure. The cloth face coverings recommended are not surgical masks or N95 respirators. Again, they're not saying go buy this stuff. And they conclude, they say, those are critical supplies that must continue to be reserved for healthcare workers and other medical first responders as recommended by current CDC guideline. So it's important to know about this Slate Star Codex. It's just really cool website. He does deep dives on a whole bunch of things. I remember when I first discovered the website, he does predictions too. No Grading does predictions. That's my website. There was a bug just there. Anyway, I remember when I first saw it, I was like, wow, this is just a better version of everything I write about. Like it just blew me away. It's a really, really cool resource. I'm not a daily reader of it by any means, but it does come up a bit where he'll do deep dives on things. Anyway, he talks about this notion of, and he didn't invent this, but he talks about this notion. He does a deep dive on face masks, and he talks about this notion of risk compensation. So just because you're wearing a mask doesn't mean you have to, you got to be careful because it might give you a false sense of security. You have the mask on and you think now you'll be a little bit that more comfortable being within 6 feet of someone, or you'll be that much more comfortable making more trips to the grocery store, making more trips to the pharmacy rather than go do one big grocery store trip, or order the stuff online if you can. So it's important that you take these active measures, but you keep doing the measures that you were doing before. I think a lot of people, and we're going to make sure these papers don't fly away here. This always fucking happens here. We're going to put them right here in this Trader Joe's bag. Okay. Don't get soft because you think you have a mask on makes you Superman. Okay. And let me tell you, walking around, I'm in a suburban area right now. I'm in Durham, North Carolina, and walking around, it is so easy to get within 6 feet of someone. And some people don't even realize what they're doing. And I don't know what the behavior has been like in cities, but I'll tell you, people sometimes they're not really doing the whole 6 feet, the 6 feet thing. And I'm like, dude, what are you doing? So you sometimes gotta be like, yo, social distancing, brother. You got to like remind people. So I know it's like, it's kind of socially awkward sometimes, but dude, do it. It's not awkward. It's worth it. You could save my Grammy's life. Just please do it. Okay. So now we're going to talk some numbers. This is the COVID tracking project. Now I want to specify, I've talked about it before on Shooting from the Hip. Now this is not an official US government or World Health Organization, or really, I don't even know who officially is backing this. What they are doing though, is combining the results of all U.S. states and territories, all the completed tests of COVID tests, and they're compiling this data. So as of the latest number, there's been 1.4 million completed tests in the United States. This was as of yesterday on Friday. What fucking day is it? April? I don't fucking know. But we're doing it. We're now, it was the biggest test day on record. It was 140,000 tests in the United States. So we have had a slow ramp up. And just last week, when I spoke about these numbers, it was about 100,000 a day. So we are getting that testing capacity up. And they have some other data on there anyway. It's a really cool project. The people that put that together, the Power software, it's a beautiful thing. So they also know, we should say, is that they can only track what states report. Okay, so this isn't some estimated, not doing any magic here. They're just going to the official state sources and compiling them all in one place. And not all states report all tests. So if anything, these numbers are low. And they do have something about hospitalization rates that aren't quite as accurate because different states report hospitalization rates different. So that is that's just an interesting thing to just to keep in mind. It's one of those things like Our World in Data, the COVID tracking project. Those are two things that I'm checking. I stopped checking this shit daily like I used to early on. I was like kind of driving myself crazy. But those are two of the things I'll check every now and then. Okay, what's the state of the world right now? And it's looking like in Italy, in some places, Italy particularly, the doubling rate of the virus is, and I don't have the numbers in front of me. Again, this is shooting from the hip. So if someone in the chat, if I'm wrong about this, I don't have the numbers in front of me, but the doubling rate has slowed. That means it's not spreading as quickly as it was 2 weeks ago. So that's a good sign. So you hear this flattening of the curve. So we're starting to see that. Now the U.S., as we spoke about last week, the U.S. is still, many mayors predict, as of last week, I said, was that mid-April is when we think it's going to peak in the United States. That's what some mayors were saying. We talked about that last week. So we're still going to see that number keep going up. We got especially New York and fucking New Orleans are a little disturbing right now. Those numbers are going up super fast. Okay, so that's enough of the numbers. So we're going to talk again. So this is one of those things I struggle with this, people, because I like to put on a good show for you guys. I like to give you guys good information. I like to think that I'm talking about things that no one else is. But again, partly I'm a fraud because partly I'm reading what other people are saying. I'm giving it to you and adding a little bit of color. So I recommend all these sources. That's why I link to them. I encourage you to go read them if you want to get the real deal. Well, first of all, you come to your boy's show. Okay, I'm gonna give you the real deal. I'm gonna shoot through it. We're hopefully have a good time. We got the chat room. But what I will say is, Howard Marks, he's been coming out now. He usually does memos every quarter, and I love reading his memos. He's an investor out of Oak Tree Capital. He's got really cool, calm, and collected. I love his takes on specifically about the markets, but he'll often talk about government behavior, and he'll get outside of his domain like anyone with an audience does. But honestly, so he released this memo March 31st, 2020. You can just go read this thing and just be more informed than anything you can, read this thing. I'm going to go over the whole thing, but you could just read this. You could stop the show right now. You could go read that. You could just read his memos once a week. And so far he's been putting out, and you'll be more informed than I think all like the daily browsing and the Fukin just opening up New York Times every day or anything like that. He lays it out. And like he's doing it once a week, so he can capture everything, and it's not just daily gut checks, but he's got a little bit of time to think about things. So we're going to go through it. So I'm going to spend a lot of time. The first 90% of his memo is all about, okay, what the fuck's going on. And I'm going to spend some time laying out the groundwork, and I think it's important to lay the groundwork, but then it gets really interesting because he starts asking some really interesting questions. So in an unknowable situation, in a situation we haven't dealt with before, I don't think it's the answers that are as interesting as the questions. So in a time like this, with some SARS-CoV-2 spreading around, we've never dealt with something of this magnitude before. It's unprecedented. So there's going to be a lot of people giving answers. There's going to be a lot of people making declarations. Now, those are all, as we've talked about before on the show, there's all going to be based on incomplete information. Those are educated guesses. Now, those are important because they affect policy and they can show us worst case, best case. But the reality is people don't know a lot of different things. So we're operating in the dark. In the case when you're operating in the dark, I think it's who's going to ask the most important questions, who's going to ask the most interesting questions. That's what's important. So he's got some really interesting questions that he posed at the end. But first, let's riff on his memo. Again, this is Howard Marks from March 31st, 2020. So here we go. In the last 6 weeks, the markets have seen the best of times and the worst of times. From February 19th to March 23rd, the U.S. stock market saw the quickest meltdown in history for a loss of 33.9% on the S&P 500. Then it's 17.5% gain from Tuesday through Thursday of last week. Again, he wrote this March 31st, made for the best 3-day stretch since the 1930s, the best 3-day stretch since the 1930s, people. So I'm going to go through more of this stuff, but we are living in history. In so many different ways, we are living in history right now. Take a breath, look around. These are the stories we will be telling our grandchildren. This is a big fucking deal we're living in. Just take a breath, relax. This is what it feels like to fucking live in one of these times. So, okay. So of the 21 trading days between February 27th and March 27th, the total of 18 days saw moves in the S&P 500 of more than 2%, 11 down and 7 up. They included the biggest daily percentage gain since 1933 and the second biggest percentage loss since 1940, exceeded only by Black Monday in 1987. We're going to keep going. From March 9th through March 20th, issuing a new investment grade bond seemed inconceivable. Then, as our trader Justin Quaglia points out, last week's news of the government's rescue package, and we talked about this last week, the CARES Act, $2.1 trillion, enabled 49 companies to issue $107 billion of investment grade bonds. That made it the biggest week for issuance on record, part of the biggest month on record, $213 billion from 106 issuers, and part of the biggest quarter on record, $473 billion, up from 40% from the first quarter of 2019. In fact, there was more issuance last week than in 9 of the 12 months in 2019. So that is one indicator. Do people believe the rescue package is going to help the economy? That's one indicator. People are buying investment grade debt. If they're willing to buy debt, that means they have some certainty about that these companies will be able to pay back that debt. So that's just a super interesting little tidbit there. So finally on March 26th, Justin wrote, that's the trader, "It's hard to believe I used the words panic and FOMO within 2 weeks of each other." So looking at okay. It's important to note the degree to which people in this market seem to think long-term phenomena can change in the short run. So again, I want to say that because I want to talk about that for a second. So it's important to note that the degree to which people in this market seem to think long-term phenomena can change in the short run. So let's talk about this for a second. Because sometimes you'll hear people dismiss the stock market and say, "Oh, it's just a bunch of changes every day. It's all just a bunch of people acting out of their gut." And yeah, a lot of that is true. But, and I heard this thing, I believe it was Naval Ravikant on a podcast with Tim Ferriss. I think so. But I remember thinking this, it's always stuck with me. Markets are now more reactive than ever, just in the last couple decades, because information now flows much more quickly than it ever used to. So 100 years ago, if a train fell off the track and some railroad company owned it or some whatever, it would take a while for that. You have to do the telegraph, then they have to get to New York, then Chicago to wake up. Things weren't as reactive because the information simply, number one, there wasn't as much information. Number two, it didn't flow as quickly. So now what we're seeing is huge swings. And again, I'm going to quote that again. seems to think so long-term phenomena can change in the short run. So just because a lot of these changes are based on the gut, but some of it is, and I think there's a reasonable it's reasonable to say that some of it is in part because the markets are reacting more quickly than ever before, because the information is moving more quickly than ever before. So I think in some ways, in some ways that's a good thing. You're pricing in new information more quickly, and you're getting a more fair price on on the different companies, different equities and bonds, what have you, anything in the market. It does make it a hell of a lot more stressful for some people, but remember, we talk about this every week on the show. Don't worry about the little swings, okay? The vast majority of people are investing for the long term. You're investing for your retirement. And we're going to talk more about that. Mr. Money Mustache, you got some good posts we're going to riff on. You're investing for the long term. You're investing for retirement. So don't worry about the short term gains. Don't even worry about timing the market, okay? Don't waste your time. Teach your kid how to fish. Fucking, I don't know, learn to paint, do some things that are going to be more constructive of your time. Learn a new skill. Don't try to time the market. Don't waste your time. We're going to talk more about that. Okay, so I'm going to go on. Again, this is Howard Marks from March 31st, 2020, from his memo. It's common knowledge that the coronavirus is still gaining ground in the U.S. and elsewhere. The economy is destined for a serious recession. Leverage entities have to worry about their sources of loans and liquidity, and the price of oil is among the very lowest since the 1973 OPEC embargo. But the prices of financial assets have moved down as well. Appropriately too much or too little. In other words, we have to consider the outlook of the appropriateness of value in the context of unprecedented uncertainty and the total absence of guidance from analogies to the past. There's no doubt about the ability of the governments and the Fed's massive cash injections to make things better in the short run. So we talked about this last week. The CARES Act and how quickly that was implemented is unprecedented in human history. It's unprecedented in world history. It's unprecedented compared to the global financial crisis, which took about a month to get that one of those the TARP troubled asset release program that Bush did. And then Obama had one when he came in that was a little bit more. That was about 750 billion compared to 450 billion, which is what TARP was, which was what Bush did. Those took a lot longer, and they were not full bipartisan support. It's blown my mind how quickly, and we talked about this last week, how quickly this was enacted. So, are this past week's remedies certain to work? Are the prior week's negatives really erased? Which will win in the short and intermediate term? The disease, economic ramifications of Treasury actions. To try to think about these things in a responsible way, I've decided to try cataloging the optimistic and pessimistic elements. Okay, so he's going to go through now. He talks about the positive case and the negative case. So this is his take on the positive case here. It's much shorter than the negative case. We'll talk about this really quickly here. So the earliest countries to contract the virus, again, this is his positive outlook. The earliest countries to contract the virus have shown good progress. The reported data on their new cases has flattened, and in South Korea, more people are released from hospitals than are entering. Herman Dembach, I butcher names on this. I'm going to stop saying, I'm going to stop apologizing for it. Just assume any name I don't know how to pronounce. Herman Dembach, head of Frankfurt office, reports that the numbers are improving in Italy, Germany, and Austria. So that's out of their Frankfurt office in Oak Tree Capital. Every forecast I've seen assumes the virus will be brought under control within 3 months or so. The curve is flattened and then turned downward. The virus is contained and then eliminated. So, testing identifies those infected, and isolation quarantine keeps them from infecting others. Herd immunity develops, reducing the number of people capable of transmitting the disease. Remember, we've talked about herd community on the show. Herd immunity is the more people that get it early on, or the more people that get it in general, then they can't spread it anymore, right? Once you get it once, you don't spread it anymore. You can't get it again. Now, the science is still out on that. This might be one of those things that you can get again. There's just a smaller % chance you can get it again. So the jury's still out on that. Well, again, a lot of this is incomplete information. We'll see more about that. A lot of this stuff will get fleshed out in the future. In the next couple of years, we're going to really be able to study the numbers on this. We're really going to be able to understand what the truth was. So warmer weather causes the disease to recede. Treatments are found that aid recovery. A vaccine is developed. Again, these are all positive things. So the economic recovery will be abetted by better news about the disease, but the improvement will mainly be the result of the success of the Fed Treasury packages of rescue and stimulus. These organizations have announced unprecedented expenditures and have indicated that they'll do whatever else it takes. Actions that were taken after months of deliberation in the global financial crisis have been rolled out in the early weeks of the current episode. Further steps are likely to include everything anyone can think of and be unconstrained as to amount. The banks are much less vulnerable than they were during the global financial crisis, with only a third of the leverage. Thus, concerns for the health of the overall financial system are greatly reduced. The U.S.'s effective private sector will supplement the public health efforts of government, producing massive amounts of supplies and equipment and developing testing, treatments, and vaccines. Again, these are all positive cases. The price declines of securities will draw on buyers, and ample capital is available in the form of dry powder in funds. Anytime see the term dry powder, basically means cash or cash-like equivalent. So dry powder just means that people are ready to buy. They've got cash on hand, they're ready to buy. So something that's interesting, that Jack Bogle, he started the Vanguard Group. The late Jack Bogle, legend, started the basically father of the index fund. He started, I think, in the 70s, and he was laughed. Wall Street laughed at him. But what's interesting is he pointed this out in an interview, and he was talking about the global financial crisis, which Vanguard had net inflows. Their clients had net inflows during the global financial crisis. And I'm sure it's similar to what's going on today. So that means more people are putting their money into Vanguard than taking it out. So he says when the market is declining, I think people forget, and he pointed this out. He says people forget that people are buying all the way down. So you see these these not dirty charts, but you'll see these things that look really bad, just a red line that goes straight to the floor. Now, what's not in that red line is the people are still buying at those prices, right? So this whole time it's going down. Yes, it's going down, but people are still buying every time. In order for the market to have a price, right? A transaction needs to happen at that given price. So just know, it kind of makes me feel good when the market's just dropping, and I don't really care about the daily swings. But when you're looking at it, you're like, wow, people are buying. People are still buying all the way down. If no one bought, the market wouldn't move. So just know that people are still putting money in the market, even when you're scared or worried about the future. There's people out there that are positive and optimistic. And damn, this hat, I wonder, damn, it's getting my hair in my face. Okay, the hat's okay. Here we go. Okay, so when I read the more positive views regarding the current episode, again, this is Howard Marks, I can't help but think of my favorite newspaper headline, which includes the phrase "bankers optimistic." Usually the case, perhaps, but it's worth noting that the story in question was published on October 30th, 1929, reporting on the prior day's stock market crash. On that day of optimism, the Great Depression still had 11 years to run. So again, we just don't know. We don't know, and that's what I really like about Howard Marks is he's not making statements so much as asking questions. So here we go. So here's the negative case. This is when it gets more interesting. This is when it gets a little fun. So the negative case. I'm very worried about the outlook for the disease, especially in the U.S. For a long time, the response consisted of suggestions or advice, not orders and rules. I was particularly troubled last weekend by pictures of college kids on the beach during spring break from which they would return to their communities. The success of other countries in slowing the disease has been a function of widespread social distancing, testing, and temperature taking to identify those who are infected and quarantining them from everyone else. The U.S., you know what? There we go. Sorry, that hat was down. We'll put it on if the bugs come. Jono, don't think I'm disrespecting by taking the hat off, but my hair was getting my face. It's a whole thing. So I'm going to keep that on deck, and I appreciate that. Testing is rarely available, mass temperature taking is non-existent, and people wonder whether large-scale quarantining is legal. The total number of cases in the U.S. has surpassed both China's and Italy's and is still rising rapidly and is likely understated due to under-testing. Again, we talked about this last year. I love people citing the China numbers without giving the Fukin disclaimer that we can't trust him. I absolutely don't trust the China numbers. We were seeing some reports, and I talked about this last week. We're seeing some reports that a lot more people, based on earned sales, for example, a lot more people are actually dying than they're saying, which means a lot more people probably getting it than they're saying. So I'm really surprised that people would say, "Well, the China numbers are dropping," and they don't even question it. I'm heavily skeptical of it. But maybe we'll never see. I don't know if we'll ever get information on that. But I am skeptical. I'm not skeptical of Italy's numbers though. So the doubled from 1,000 to 2,000 between Thursday and Saturday. From a recent tweet by Scott Gottlieb, MD, former commissioner of the FDA, I'm worried about emergency situations in New Orleans, Dallas, Atlanta, Miami, Detroit, Chicago, Philadelphia, among others. In China, no province outside Hubei ever, assume I don't know how to pronounce that either, ever had more than 1,500 cases. In the U.S., 11 states already hit that total. Our epidemic is likely to be national in scope. The U.S. is under-equipped to respond in terms of hospitals, beds, ventilators, and supplies. Underprotected doctors, nurses, and first responders are at risk. Again, this is the negative case from Howard Marks. This is why he's worried about the future. I'm concerned that the number of cases and deaths will continue to rise as long as we fail to emulate the successful country's actions. The health system will be overwhelmed. Triage decisions, including who lives and who dies, will have to be made. There will be a point, which is what's going on in Italy, which has been going on. They decide who lives and who dies, who can they give care for, and who they do not. There will be a point where there doesn't seem to be an end in sight. I'm afraid the headlines are going to get much uglier in this regard. Last week, 3.3 million unemployment claims were filed. So the latest, so he wrote this, but the latest is 6.6 million. And a good rule of thumb that I heard was for every 1.5 million that claim unemployment percentage ticks up 1%. So this broke the previous week's 282,000 people the previous week who collected unemployment record of 695,000. So the weekly record was 695,000. And this is absolutely, the current unemployment claims have blown this out of the water. So again, that's why I'm wondering, we've never dealt with this much unemployment. We've never dealt with a situation like this. So it kind of blows my mind that the market isn't down further than it is. And I'm not trading on this information. This is just what my gut says. So many companies went into this episode highly leveraged. Management took advantage of the low interest rates and generous capital market to issue debt, and some did stock buybacks. So even though these companies were making a shit ton of cash, what they were doing was they were buying back their own stock to increase the value of their own stock, which returns value to shareholders. Stock buybacks are not categorically a bad thing. You often hear that they are a bad thing. Well, it turns out you're a shareholder if you have a 401k. So they're raising the price of your stock and thus helping you retire. So they're not categorically a bad thing. They become a bad thing when the management gives themselves crazy comp packages and does some other, extracts money from the company. And yeah, the board of directors is supposed to oversee that. But that's when I start to feel shitty about it. But not only did they have all this cash and buy stocks, but they were raising debt too at the same time. So it's like, God, what the fuck are you doing? Now, I'm not going to pretend to know more than these CEOs, but it just feels a little wrong. Now, the result of either or both is to increase the ratio of debt to equity. The more debt a company has relative to its equity, the higher return on equity will be in good times, but also the lower the return on equity or the larger losses in bad times, and the less likely it is to survive tough times. Corporate leverage complicates the issue of lost revenues and profits. Thus, we expect to see rising defaults in the months ahead. The systemic importance of the banks necessitated their bailouts, the resentment of which contributed greatly to today's populism. So he's talking about the bailouts of great financial crisis. This time, well, actually, I think he's talking about this time. I mean, the banks have been certainly been helped in this, but certainly helped in the great financial crisis as well. So, but he says this time, leveraged securitizations are less pervasive in the financial system, and their risk capital wasn't supplied by banks, thanks to the Volcker rule, but mostly by non-bank lenders and funds. Thus, I feel government bailouts are unlikely to be made available to them. As an aside, it's not that the people who structured these leveraged entities erred. They merely failed to include an episode like the current one among the scenarios they modeled. How could they? If every business decision had been made in contemplation of a pandemic, few deals would take place. So you kind of hear this. This isn't a black swan event. This is what's it called? Like a gray rhino, which means a lot of people predicted this. A lot of smart people predicted this. A lot of people knew this was going to happen. It was just a matter of time. So on one hand, when people say, "Oh, we couldn't have predicted this," well, super smart people. Epidemiologists were saying this, people that study viruses were saying this, people knew that something like this was very possible. But to Howard Marks's point, if everyone built in a possible pandemic in their fundraising or in their future outlook, think of just your personal situation. If every decision you made rested on the possibility of a pandemic, you'd probably live a less full life and you'd probably be way too risk averse. Now, that doesn't mean you can't do simple things like have 6 months of cash on hand, which is what I always recommend. And but there are things, it is possible to do things. So I think that's just an interesting little take there by him. Okay, so due to a confluence of reduced, now we're going to talk about the oil prices, which he goes on, this is still part of the negative case. Due to a confluence of reduced consumption and price war between Saudi Arabia and Russia, the price of oil has fallen from $61 per barrel at year end to $19 today. The price of oil was only slightly lower immediately before the OPEC embargo in 1973, and in the 47 years since then, it has only been lower on two brief occasions. While many consumers companies and countries benefit from lower oil prices, there are serious repercussions for others. So here's what happens when oil prices low. Big losses for oil producing companies and countries. Job losses. The oil and gas industry directly provides more than 5% of American jobs, and more indirectly, and it contributed greatly to the decline of unemployment since the great financial crisis. A significant decline in the industry's capital investment, which recently has accounted for a meaningful share of the US's total. Production cuts, since consumption is down and crude product storage capacity is running out. The damage to oil reservoirs that results when production is reduced or halted. A reduction in American oil and a reduction in American oil independence. So something interesting about the oil stuff, and I am no expert on this. I'm going to say that about every little thing I talk about here. I'm no expert on this, but something, when you think about oil production, it's not, you can't just turn the faucet on and turn it off. So if you have a well, or if you're an oil producing company, you can't say, okay, prices are low right now, so we're going to furlough all the employees, we're going to turn off the production. It doesn't work that way. It takes several months to do that. Okay, so once you ramp up production, if the price drops, you have all this production, and you can't just drop it super quickly. So what do you have to do? You have to sell for rock bottom prices, or partly you can store it, right? So you don't have to sell it right away. But there's only so much storage, and it's only so feasible to store so much. So it's really not just an on-off switch. It really screws you. So, and another thing people don't realize, and again, I've talked about this before on this show, I believe, people forget, as of 2018 or 2019, the U.S. became the biggest exporter of oil in the world, so bigger than Saudi Arabia. Now, Saudi Arabia has the biggest proven oil reserves, but they're part of OPEC. What that means, it's an organization for petroleum exporting countries. So OPEC, what they do is they limit how much that they export, how much they put in the market. They do this to price fix. They do this to keep oil prices high. So the U.S. is with the result of shale oil extraction, has been the biggest net exporter, biggest export energy producer, and hold on, I forget, don't quote me on this, it's either the biggest net exporter or the biggest just energy producer in the world, because a lot of it we use the energy ourselves. We do export some, but also we use some of it ourselves, or a lot of it. And it's also a reason that carbon emissions, actually, CO2 emissions in the U.S. have declined, because a lot of natural gas now, it burns cleaner than some like oil and coal. And that has seen a reduction in CO2 emissions as a result of burning natural gas instead. So those are some interesting kind of slow-moving hippos that I think a lot of people don't realize. And I actually don't think, listen, climate change is real. That's absolutely, and we need to get to renewable energy as quickly as possible. Full stop. But I do think it's not a bad thing if for the U.S. to be producing oil, if the alternative is to buy it from countries like Russia and Saudi Arabia. Those are oppressive regimes. For every cent we can avoid giving to those countries, better off. Okay, so we're gonna keep. Okay, so we're gonna go to the next page here. So this is still the negative case. Now we're gonna do again. There's just a few more points he makes with the negative case, and then we're gonna get into the interesting questions he said. So at the beginning, I kind of teased you with some interesting questions he has, and this is where it gets interesting. So just a few more points, and then we're gonna flip this on its head a bit. So I'll share this is what he says, Howard Marks. I'll share a useful description of the economic situation, the government response from Conrad de Quadros of Breen Capital, an economist I've taken to quoting. The CARES Act should not be thought of as a fiscal stimulus, but as an economic stabilization package. The collapse of economic activity in March 2020 is not a normal cyclical recession, but is the result of a mandate. Oh my God, there's a spider off my. Jeez. Okay, we're good. The CARES Act should not be thought of as not a normal cyclical recession, but it is the result of a mandated timeout of individuals and businesses by the government. There is no avoiding recession because the output of airlines, hotels, restaurants, movie theaters, etc. is lost. However, these programs will support businesses so that when the virus permits the resumption of activity, we can see a sharp rebound in activity. Skilled labor was a scarce resource just 1 month ago, and the key is to keep that labor and those businesses connected. The support for businesses is really support for labor, because if companies cannot pay workers from cash flows, the layoff figures will dwarf the numbers suggested by the latest jobless claims data. So how effective will the measures be? In the latest quarter, labor compensation was $2.9 trillion. So that was the latest quarter, $2.9 trillion. And to consider a purely illustrative number, a 20% actual drop in labor incomes amounts to $577 billion. which is about the magnitude of direct income support to households without considering the impact of support for businesses, which will head off a steeper decline in labor declines. Okay, so labor compensation, the latest quarter, 2.9 trillion. So there's about 577 billion going to U.S. households. So that will make up for about total 20% lost in labor incomes. So who knows? We'll see if that's enough, but that's just interesting, just to ground those numbers in something. So last negative thing, and we're going to get to the questions here. After a few months of being housebound, we suspect there will be plenty of pent-up demand. The fiscal deficit in 2020 could be the magnitude of 2.5 trillion, but if the package fails, the recession would be longer and deeper and the fiscal cost would be greater. Now, this is a lot of the same stuff you saw during global financial crisis. Now, I was a little one. I didn't know what the fuck was going on. Well, a little one. I was in high school. Actually, I do want to share something epic about that global financial crisis. Mrs. Cantwell was my econ teacher at Notre Dame High School, Sherman Oaks. I remember when shit was hitting the fan. I remember people coming into class like, oh, like what's going? People were kind of freaked out, and I remember one of my classmates saying, like, my parents lost. They said some crazy number, somebody, and Notre Dame, well-to-do school, some rich-ass people go there. So I was just like, holy shit. So people were like sharing, like, this is scary. And then Mrs. Cantwell, God bless her, econ teacher, she's just like, when there's blood on the streets, that's when you buy. So all these like freaked out kids are like, oh, my mommy and pappy are losing all their money. The fucking she just comes in, that's when you buy. I was like, oh, Cobra. So I just will never forget that in econ class when shit was really hitting the fan, and yeah, so that was epic. Anyway, okay, so here's where he starts talking about here's where he starts asking the questions. So and we talked a little bit about this last week. So there was that that representative, I forget, Thomas Sorrell or something, the guy that delayed the CARES Act voter, was trying to delay it by getting a quorum. He said, well, if we're going to raise the deficit by 4 or 5 trillion, why not just raise it by 320 trillion? Why not just give fucking everyone $1 million? Is that the math on that? I'm not going to do math live. But why not just raise it to 320 trillion? Why? So his whole point was like, does the debt even matter? If we're not worried about 6, why are we worried about 10? Why are we worried about 50? Why not just do 300? Now, the obvious counter to that is those are completely different numbers. There's 5 versus 300. I mean, what are we talking about there? But it is interesting, and I think that it is important to understand that we are in times that we have never seen before in the history of modern economies right now, okay? In the history of capitalism, we have never seen what we're seeing now. We never saw what we were seeing now in 2008 with the global financial crisis and the amount of government intervention that maybe we should have done that during the Great Depression, but it was an absolutely unprecedented event. And we still don't even know the long-term effects of the government buying assets and pumping this much money in the economy and running this much of a deficit, and having negative interest rates that the U.S. hasn't gone to, but the European Central Bank has had to do. Negative interest rates. You have to pay the government, the European Central Bank, to hold your money. It's literally these are unprecedented things, and we don't know the effects of them. We don't know the long-term effects. We're still dealing with this stuff. So I think it's important to ask these questions. Well, what could possibly happen if the debt is this high, or if we not even screw the debt idea. If the government is just doing this much intervention into the economy, what are the long-term effects of that? So here's what he says. So in my simplistic view, I imagine the U.S. government can print enough checks to replace every American worker's lost wages and every business's lost revenues. In other words, it can stimulate the effect of the economy on incomes. But I have 2 questions. Is that okay, and is it enough? Now, it's been crazy that no one talks about the debt anymore. Trump came in, absolutely destroyed the party, and there used to be fiscal conservatives on the Republican side. Now Trump's running, even before this 2.1 trillion CARES Act, the stimulus, this guy was running up fat deficits, and he was talking about we're going to balance the budget and all this. And he did when the economy was on fire, fuego emoji. He fucking did the Jobs and Tax, American Jobs and Tax Act, whatever, his big tax break thing, when the economy was running super hot. So, which was only going to raise the deficit. So it's like, what do we fucking do? Now's not the time to do that. We need to save that in our toolkit for when shit hits the fan. You don't just stimulate the economy when it's already fucking doing well. It's not ideal. Now, John Maynard Keynes, who a lot of people cite as the guy that government big time, government spending, he's all for it. He also said that people forget. He also said that when times are good, when times are bad, government should spend. When times are good, the government should pay down that debt. That's what he says. That's the other part to what he says. He doesn't just say the government should just spend. He said, okay, spend, stimulate the economy, but then pay down that debt. It's funny. It blows my mind that we're not talking about these problems at all anymore. The whole thing of fiscal conservative and balance the budget, which I think it's good that the Republicans would have some people that cared about that. Some Democrats as well, but not as much so. I think that was actually a good thing to have a balance there. And now we're not seeing that at all. It's absolutely hilarious. So, okay. These days, for example, people are counting on, again, this is Howard Marks. He's asking the questions here. These days, for example, people are counting on grocery deliveries and takeout food. But does anyone wonder where food comes from and how it reaches us? The Treasury can make up for people's lost wages, but people need the things wages buy. So replacing lost wages and revenues will not be enough for long. The economy has to produce goods and services. Second, let's government writes checks to replace wages and revenues forever, and that the economy continues to produce at a minimal but sufficient level so the things we need materialize. What will be the long-term effect? It's kind of an interesting case study there. And Atlas Shrugged, there's a book, Ayn Rand, Snake, thanks for recommending. I still haven't fucking finished it, but there's an interesting thing that happens in that book where the government freezes everything. Basically says you can't change the price of products. You can't leave your job, and everything has to stay the same. And it goes through kind of a possibility of what could happen in a situation like that. So we're not there yet. Obviously, I'm not saying that's what this is, but it's an interesting thing. You freeze everything. People keep getting the same wages, and they don't move. Granted, the difference is people right now are just not able to work in a lot of the cases. So it's an interesting. We are seeing it. Yeah, it's an absolutely, again, unprecedented time. So he goes on. As with oil reservoirs, what will be the impact of long-term inactivity on the ability of the economy to produce? How long will it take to restart the economy and bring it back to its previous level of functioning? Lastly, what would be the Treasury continuing to add trillions of dollars each quarter to the deficit, which was running at $1 trillion even before the virus hit, and of the Fed continuing to pump trillions more into the monetary system? Last June, in my memo, This Time It's Different, I discussed modern monetary theory, which, to simplify, says federal deficits and debt don't matter. It's no longer just a theory. We have to deal with its implications now. What would be the effect of the above on the value of the dollar, and thus on the dollar's status as the world's reserve currency? Of course, in this environment, the other countries are likely to behave much the same as we do, meaning the dollar may not be debased relative to other currencies. Might a reduction of the dollar's reserve currency status make it harder for us to finance our deficits and raise the interest rates we have to pay to do so? Might money printing to that degree bring on an increase in inflation, which people thought that would happen during a global financial crisis. We pumped this much money into the economy, and we did not see that. Might a supply shock stemming from reduced global output of raw materials and finished goods add to the increase in inflation? The factors that create inflation are truly mysterious, but these certainly seem like reasonable candidates, especially when combined. Possibly without serious vetting and conscious decision to adopt it, modern monetary theory is here. Whether we like it or not, we'll get to see its impact much quicker than I had thought. And remember, 100% of the top scholars polled by the University of Chicago Booth School of Business disagreed with some of MMT's claims. Rather than reinvent the wheel and to show you how others are viewing the situation, albeit in ways that may parallel my view, I'm going to share the workload by recycling the conclusion from a note I received from Jason Klein, CIO of Memorial Sloan Kettering, which was a cancer research institute. So we're kind of going, well, this is Inception right now. I'm quoting fucking Howard Marks, and he's quoting someone else because he's passing the buck just like I passed the buck to Howard Marks. So this is what he says. Jason Klein. The bull case from here seems to be that monetary policy will work, fiscal policy will kick in, valuations have reset. Society will follow effective healthcare policies, e.g., social distancing, that will be effective. The real economy will adapt, and geopolitics will remain subdued. The bear market seems to be the flip side of each issue and has the potential to be much darker, as the prospect of a hot war with China or even Iran seems rather ominous. I don't think that's going to happen, by the way. Across all recent events, I find it some ways most interesting that Saudi Arabia chose to instigate a supply shock targeting U.S. shale at a moment when the demand for U.S. energy was already reeling from the demand-side shock from COVID-19 restrictions. It highlights the unpredictability of events. As you've said, nobody knows. Okay. again, with Saudi Arabia, they started this price war when COVID was starting to when COVID was starting to pick up, and we talked about it on the show. But basically, they're not limiting production, and what they did was they targeted Russia, and they actually targeted Russia's clients, the people that Russia, the countries that Russia gives oil to. They gave them huge discounts, like I think at $8 a barrel or something, to absolutely slam Russia. But what's the effect of this? Keeping this output going, it keeps prices low, and it's hurting U.S. shale companies as well. So, um, here we go. Richard Mason. So this is we're going to end with this. This is the last. Oh, actually, we got a couple more points on this, and then we're going to have a little break, and we're going to talk about how to avoid Zoom calls here. Well, it's kind of just a little break from all the numbers and shit. We're going to have a little fun with that. Okay, so here we go. Richard Mason, my Oaktree co-founder and resident scold, might say Twitter is an unworthy source, but nevertheless, I want to include a concise summary tweeted by your MTL broker. So here's the bull case. Everything opens in 6 weeks. The unemployed can go back to old jobs, or as true Americans, bootstrap. Economy back to normal within 6 months. $2 trillion in private equity dry powder. Low. Wait, hold on. I don't think that's P, private equity dry powder. I don't know, but anyway, I'm not 100% sure on what PE means in that regard. Is there 2 trillion? No. 2 trillion money in dry powder. Low gas prices and 0% interest rates pour fuel onto the economy. The Roaring 20s mean that the 2020s now. It's definitely not 2 trillion in private equity dry powder. There's not. P is not that fucking big. Someone fact check me on that. I don't want to get the numbers wrong, but I don't think that's legit here. Maybe he meant something else by that. Okay. Bear case. So here's the bear case. Unemployment goes to 20% plus. Everything does not go back to normal before at least a year or two. And in the meantime, there's a huge demand shock. The effects of the lockdown on businesses as well as the oil shock creates depression-like conditions. How Mark says, nobody knows. He puts that in bold. Nobody knows. I love it because he doesn't know. And when you admit you don't know something, it allows you to look at all possible angles. If you think you know something and you think you have an idea on how something works, what are you going to do? You're going to try to prove that out. Howard Marks isn't trying to prove anything. He's just trying to lay it out for y'all to play it out, okay? For us to play it out, okay? So that's why I love quoting him, because he's not making these big guesses. And he doesn't go completely uncobra. He does say some things, make some statements, but for the most part, his whole ethos is who the fuck knows. So here's how he ends. In the global financial crisis, I worried about a downward cascade of financial news and about the implications for the economy of serial bankruptcies among financial institutions. But everyday life was unchanged from what it had been, and there was no obvious threat to life and limb. Today, the range of negative outcomes seems much wider, as described above. Social isolation, disease and death, economic contraction, enormous reliance on government action, and uncertainty about the long-term effects are all with us. And the main questions surround how far they will go. Nevertheless, the market prices of assets have responded to the events and outlook. In a very micro sense, I feel last week's bounce reflected too much optimism, but that's me. I would say assets were priced fairly on Friday for the optimistic case, but didn't give enough scope for the possibility of worsening news. Thus, my reaction to all the above is to expect asset prices to decline. You may or may not feel there's still time to increase defensiveness ahead of potentially negative developments, but the most important thing is to be ready to respond and take advantage of declines. The world will be back to normal someday, although today it seems unlikely to end up unchanged. What matters most in terms of both health and finances is how we do in the interim. Stay safe! Exclamation. So that's the deal. I think it's fucking super interesting here. Hold on. We gotta move this. Out of the sun here. We're gonna get a little closer to me. Hopefully, we're all good there. Always got to move this fucking umbrella. Chase the sun. Okay. So here we go. So you may have now, Charlie. I saw you typing. I don't know if that's what you were about to say, but I just moved that. I think that might have messed up the fucking stream for a bit, but we're all good here. Thanks for. But yeah, let me know if there was another issue. Because again, people, I'm not looking at the chat. If you got a question, comment, let Charlie know, and we'll get to it at the end. Because I'm just trying to stay in the flow, and we'll get through this. Okay, here we go. So how to avoid Zoom calls. So I'm all down for Zoom calls. I've done a couple with the homies. They're fun, but you'll get some people coming out of the woodwork that you normally wouldn't Zoom call with, maybe. And particularly family, not to call anything out, like, extended family. People are just trying to Zoom call this, Zoom call that. The cousins are coming out of the woodwork, and God bless y'all. But what happens is, so The Zoom calls are kind of a pain in the ass, in my opinion. Some of them are not. But you just gotta know how to wade through it. So if you're worried like me, sometimes like you'll get I don't know. There's a couple giant email threads, and you're like, "Fook, everyone's trying to organize a Zoom call." If you don't want to be part of it, it's very simple. Here's what you do. You don't want to be the guy that doesn't respond to the email because like, wow, this guy's not contributing. So here's what you do. You respond to the email or the group text. You say, "Yeah, down," and then it's pretty simple. That's all you say, and then it won't happen. There'll typically be a message like, okay, well, let me know when works for everyone. People will say that, let me know when works for everyone. And then no one will respond. It's a beautiful thing. So a lot of these things die on their own and you don't have to worry about it. So you don't want to get stressed out. I used to find myself getting stressed out, like, not during this time, but I used to. I've shifted my PE does equal private equity in that context. Thank you. I appreciate that, Charlie. That's when you do have to bubble that. Wow, 2 trillion in private equity dry powder? That blows Jesus, that's insane. That blows my mind. I'd like an explanation for anyone in the chat on that. That seems like a what the fuck? How is there that much money on the sidelines? Am I high? I don't know. Anyway, I'm not an expert on this. That just surprised me. But anyway, you just don't respond to the Zoom, the little email. It'll say you just don't, and it'll just die. It'll die. And listen, if the Zoom call needs to happen, it will happen. Someone they'll get people will join. They'll get action. They'll say, "Yo, we're gonna make it at this time. Everyone's gonna have a good time. We're gonna do it." But a lot of the times, just reply to the call. "Yo, hope everyone's doing well." Like totally down, and then just don't reply, and it dies, and you don't have to worry about getting 2 hours taken up with some dog shit audio. And you're trying to, you know what I like enjoying the people around me. Honestly, you like to be present. People around you, boom, try that. Also, you gotta keep in touch with the homies, of course, and family and stuff. But oftentimes I think it seems like people are just Zoom call this, Zoom call that, and all of a sudden it's your Zoom calls. It's like, let's relax on that. Okay, so we're gonna go back to some Mr. Money Mustache. Mr. Money Mustache, I haven't talked about him on Shooting from the Hip. Um, so he has a really good blog. I know it's kind of a funny name. You kind of don't do. It's like, why you quoting a guy, Mr. Money Mustache? But he's got some really good points, and he's really affected the way I view money. And I think he's got some interesting stuff here. So he has an article that said he posted April 2nd, 2020. He says, on the financial side, I've seen media stories about the end of FIRE movement. And a close friend even said to me, well, I've got to go back to work now because all my investments are down 35%. I'm not financially independent anymore. So the FIRE movement is financially independent, retire early. So this is something that I think people, I'm definitely trying to get as financially independent as possible. People talk about retiring early. Now, I think people talk about the wrong way, like when they're saving money now. Like I try to save as much money as possible right now. I think, I value freedom so much more than I value like a nice pair of clothes, a nice watch, a fucking new phone all the time, a new computer all the time, a new fucking car, a new this, a new that. I value freedom. And what gives you freedom? Well, one thing that gives you freedom is money. And money gives you freedom because money is all it is stored energy. And if you save enough of it, that means you don't have to do dog shit things you don't want to do. You don't have to work a dog shit job you don't want to do. So I'm not trying to save money now to retire early. I think the term retirement is just a weird. I mean, yes, when you're older, you just want to kind of sit down, maybe knit, just read. I hope I'm doing this when I'm like 90. That would be epic. I'm still doing the podcast. That would be beast. Anyway, I think people should really look about. When you sell it to them, like, yo, you should save money to retire early, because people are like, I want to work. They say, I want to work. It's like, okay, you want to work, we get it, but you think about financial independence. Now, financial independence just means that you have enough money saved that you can choose your opportunities, not only your work, mainly your work. You can choose what you work on to make money because money is not a factor. So if you've saved enough money of 15, 20 years of good saving, so if you start saving when you're 20 and you've saved very diligently till you're 40 or even till you're 35, you now all of a sudden, you don't have to take a dog shit corporate cube job that you don't want to take. You can think about maybe starting a business. You can think about experimenting with other things. So that's why I'm a big fan of this movement. It's not about not having to work. I think work is a good thing. And Mr. Money Mustache talks about this. People like to work. It gives them pleasure. People like solving problems. That's the whole point. I hope to God, if I got $1 billion out of nowhere, I would keep working and grinding and trying to fucking, do things. That's why you look at the lottery numbers. Now, I don't know if this is bullshit. I haven't looked this up, but people say, the depression rate or like the suicide rate if you win the lottery is just off the charts. And maybe that's true. I don't know if that's anecdotal. I would love someone to look that up in the chat if we could verify that. I'd appreciate that. Get back to it at the end of the show. dude, I like having the chat there. Even Charlie, if you could look that up, that'd be beast. If that's actually true, because it's a headline grabbing thing. I don't know if it's true, but people, you need to work. You need to do things. You need to give yourself value and make you feel like you're moving the needle for the world. Okay, so anyway, so he's talking about how, oh shit, can't retire now. The markets are down now. I thought I was financially independent. Now I'm not. So I'm going to quote some of his stuff. Here's what he says. Even worse, some people are trying to time the stock market, selling off their investments at a discount in the hopes of protecting them, hoping to subsequently outsmart everyone else and rebuy them at even lower prices just before some future rebound. Okay, so this is a thing you should not do. Some people, if you think the market's going to go down a lot more, you'll sell now, then you'll try to rebuy and lower. Don't waste your time, especially when you're talking about your retirement. Just don't waste your fucking time. You just don't know. You just don't know. You don't know what the market's going to do. So don't try to outsmart it. Don't try to outclass it. Just buy and hold. Okay, and don't start selling till you're older. Okay, so he also, and this is where he gives his positive spin. He says, meanwhile, innovators are still innovating all over the world. People are staying up late working labs. Vaccines are being tested. Genes are being sequenced, and the current virus will end up beaten and then written up as a very significant chapter in the books. But apart from all this, there's still way more going on out there, which just isn't making it to the headlines. So he's saying, so I should give a little context here. So his whole point is that people, okay, Habibi, this links, it's facts. Okay, it is facts. PubMed, okay, interesting. Thank you, Charlie, appreciate that. Now I can't click the links, unfortunately, Charlie, because I don't got time but it looks like it is facts that people that lottery winners tend to, Barlow, you cobra. So Barlow, again, Charlie Finley, my fucking boy, who's a no gradient fucking team member, fucking keeping us moving forward. I love you, brother. He summarized the links because I couldn't do it for it. He says, lottery winners tend to off themselves. I love that. Okay, well, I don't love that they do it, but anyway, thank you. That's a beautiful quote. Thank you, Charlie Finley, Cobra. Okay, so hi, how we doing? I'm just talking to myself over here, doing a little podcast. So you're good. Sorry if I disturb you. How we doing? Yeah, we got neighbors in the back, so we're hanging out. So we're gonna keep going. Maybe keep it down a little bit. We're gonna keep the profanity down. She's doing laps. We're good. We don't cuss too much on the show. Okay, here we go. So, here's another thing he says. Meanwhile, right. So this is what I was saying before Charlie's Cobra statement. Here's the deal. So the reason that you can retire, the reason that you can make money with your 401k, your IRA, the reason that companies' values go up over time is simple. It's very simple. It's because humans are working and trying to do new things. They work hard. They try to invent new things. They try to invent new processes. They try to make a product that people want. All this moves the economic machine forward. So as long as humans still have the freedom to do that, as long as we still have a system that allows humans to innovate, then the stock market will be just fine. So this is an interim short period where it's where it's dropping, but the fundamentals are still there. Okay, a lot of people lost their jobs, but the fact is it's not as if all humanity said, I don't want to work anymore. I don't want to try to invent new things. I don't want to try to move my business forward. I don't want to try to produce a product that people want. So here's what he says. So, but apart from all this, so I should say, when people do that, they have companies, and when they do that for those companies increase in value. When they increase in value, your stocks go up, and the stocks that you own, your 401k and IRA, go up, and that's how you retire. It's simple as that. So here's how it goes. But apart from all this, there's still way more going on there, which just isn't making it to the headlines. Engineers and scientists are still inventing things that will drastically improve the future. Solar panels are still streaming out by the trainload and being installed worldwide. Better and better batteries, which will eventually displace all fossil fuel use, are evolving. The most efficient batteries in history are being built. Gene therapies are advancing, which will eventually make a mockery of all of our current health conditions. Internet connectivity and education is becoming more widely available and cheaper, which is allowing the next generation of brilliant kids to grow up and learn faster and do more than you or I could have even dreamed. We got a couple munchkins walking over here, and that is the reality. They're growing up in a world where they'll be able to do more than you or I could have ever dreamed with the tools that are being produced right now. Okay. So he also said, and all this will happen regardless of the course of the current pandemic. So that's still going to happen. So the stock market's still going to do well because human ingenuity is still going. It's still piping. It's still still teeming. Okay, so here we go. But in this situation, it really helps to understand the big picture of what's actually going on. The world is not ending. The air out your windows is not a swirling cloud of certain death. All that has changed is that we are in a self-imposed economic slowdown that has been created purely to save the lives of our most vulnerable people. So here's where it gets a little interesting and kind of goes, you're maybe not hearing this take very often. So, which is one of the most compassionate things our society has ever done. To me, this is a remarkable and wonderful moment, and I would not have guessed that such a capitalist country would ever have the balls to do it. In the worst case, our public officials would all downplay the risk of COVID-19, and we'd keep working and traveling and spreading it freely. We'd maximize our economic activity and let the disease run its course. From the disease models I have seen so far, again, this guy is not an expert, epidemiologist, virologist, what have you. But so some of the numbers he's saying, he's just making a point. So here's what he says. Half of those, so from the disease models I've seen so far, about 70% of us would eventually contract it if we just let it run its course. Half of those would have no symptoms or very mild ones. A smaller but still huge number will get sick or very sick. 10% might end up in a very overloaded hospital system, and in total, about 1 to 2% of our population would die from complications, partly depending on how quickly we could put up temporary treatment centers to cycle through 30 million people in only a few years. It would be cruel and chaotic, but in reality, we would still not even be approaching the conditions that people in the developing world deal with every day. Our world has been cruel and chaotic in so many ways, which affect a much larger number of people. We just happen to be used to them. And one thing that humans are exceptionally good at is getting used to things. So he makes the point. Now, listen, he's not making this point to downplay COVID. What he is saying is he's just trying to put things in perspective a little bit. Now, you'll often see people say early on when they were just trying to downplay this stuff, they'd use numbers like, well, people would die more in car accidents and blah, blah. And that some of those numbers are true, right? Right, but a lot of people sometimes would use that as a tactic early on to try to downplay this and say COVID is not a big deal. Everyone should keep going along. So he's not saying we should keep going along. He's saying we should social distance, do all this stuff. But he is saying, to put it in perspective, here's the annual number of deaths by cause in the millions. This is in the world out of 2016. So 17 million a year cardiovascular disease, 8.9 million cancers, respiratory disease is 3.5 million. Oh, well, interesting. That would be included in COVID, I assume. Diabetes, blood, and endocrine disease, 3 million. Dementia, 2.3. Lower respiratory infections, 2.3 million. Diarrheal disease is 1.6 million. Road incidents, 1.3 million. Liver disease, 1.26 million. Tuberculosis, 1.21 million. So, his point is, there are all these fucking things. A lot of people, millions are dying every year from these things. Now, he's not saying this is we shouldn't respond to this. He's just saying that just to put a little bit of perspective on it. So, but he goes on to the more compassionate case, which is the way we are following now. So in the more compassionate case, which we are currently following, we drastically reduce the amount of contact we have with each other for a few months, which cuts the number of deaths in the U.S. down from 3 to 6 million down to perhaps 200,000. In exchange, our economy shrinks by several $1 trillion. So he does some back in the envelope. He says it was about 21 trillion in 2019 for a year or more. Assuming we are preventing 3 million early deaths, this means our society is foregoing about $1 million of economic activity for each person's life that we extend. And frankly, it makes me happy to know we are capable of that. So that's the big picture. We are cautiously and temporarily buckling down and making some sacrifice in order to help other people. To me, that is not a cause for panic or fear. It's a chance to try even harder and be thankful for such a once-in-a-lifetime opportunity. So here's what he says, some of the good things coming out of this, and I think they're worth investigating. So we're driving around and polluting far less. The air is drastically cleaner everywhere. People are out walking with their kids far more. The streets of my town are nearly free from cars and are being enjoyed by appropriately spaced bikes and people for the first time. Our expectations are being reset. Someday soon, it will feel like an absolute joy and privilege to walk into a store and see things fully stocked first again. And imagine the feeling of taking a vacation or attending a big event or a restaurant or a party. People in rich countries may realize that we can afford to be helpful and compassionate after all, while actually increasing our long-term wealth and happiness rather than compromising it. And the world is getting a valuable practice run at handling a pandemic, which we've talked about, with a relatively mild disease rather than something far more serious. Just as with any recession, weak companies will go bankrupt, stronger ones will streamline their operations and get smarter, and the chaos and broken pieces will become the raw materials from which an enormous batch of brand new companies will form. Better ways to track and treat disease, more scalable and less bureaucratic hospitals, more options for remote medicine. So these are some of the things that may come out of this as well. And more support for remote work and virtual offices and virtual learning in general. More home delivery services and fewer big box stores and waste parking lots. More support for biking and walking and a million other things that a billion other people will think of. The end result will be a better, more resilient, and richer world than ever. Yes, this will also eventually mean more money in your retirement account. But more importantly, it means better and happier living conditions for every living thing on earth. While this all sounds like optimistic magic, it's actually just a byproduct of human nature. We are lazy and change averse. We are a lazy and change averse creature, and we become complacent when our fearful and primitive brains think things are good enough for survival and reproduction. So, oddly enough, we often need a good slap upside the head to get off of our collective asses and actually make some improvements. Observe the wisdom of our elders. When the going gets tough, the tough get going. Necessity is the mother of invention. What doesn't kill you makes you stronger. As old and repeated as these slogans might be, they stick around. Again, this is Mr. Money Mustache saying all this stuff, and I'll link to all this. I'll link to this this post. As old and repeated as these slogans might be, they stick around because they keep proving to be remarkably true. They are a real-world manifestation of badassity that is built right into our human DNA, which is why they are some of my favorite phrases in life. Okay, he says, are things a bit hard right now? Good. See you in the inevitable and incredible boom time that will result. So I just think that, I think that's an interesting piece. I want to share that with y'all. I'll link to that, and we'll talk a little bit more about your money, how you think about retirement. So some people say, oh, if you're retiring right now, that would suck. Well, the reality is, you're only going to withdraw some of that money. So if you don't have a job today, if you're like 65 and you just retired, you're only going to, and we'll talk more about this, but you only withdraw a small percent of that money. You're not going to withdraw all of it. So you're selling it for fire sale prices, but guess what? It's going to rebound in a few years, likely, and then it'll go up. And bada bing, bada boom. So it's not as if you're screwed, even if you happen to be retiring right now. Okay, so here we're going to talk a little bit about. Now we're going to switch it up here. We're going to and I'll give you a little taste of what we're going to talk about, just to give you some little teaser here. So we're going to talk about an uncensorable internet. Right now, the internet is absolutely censorable, but there's currently tech right now that's available that is questioning that premise. Then we're going to talk about another Mr. Money Mustache thing that he says basically how to retire off of a fixed chunk of money. So we just walk you through what does retirement actually look like, how you can do it sooner than you might think. Damn, I copied basically his whole fucking article. Okay, then we're going to talk about an interesting tweet I saw from Balaji Srinivasan, who he was early on one of the people saying, yo, this is going to be a pandemic. This is going to be really fucking bad. We need to get our shit together. So we're going to talk a little bit about something he said that I think is interesting. And then we got some other stuff coming up. So we're good to go. Okay, so uncensorable internet. So I'm going to start out with a quote here. This is from John Gilmore. The net, this was early days. This was a while ago when the internet was first kind of coming online. I don't exactly know when he said this, but the net interprets censorship as damage and routes around it. So that was like the beautiful case of, people's view of the internet. They said, oh, it's going to open up doors, freedom for everyone. And then, Bill Clinton talked about, not really related to this, but Bill Clinton talking about China opening their doors, being more of a market economy. There's going to be, they're going to have to be a democracy and everything, freedom's going to flow and blah, 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 blah. Well, no, it turns out that's not true. It turns out the internet is absolutely censorable. It turns out the net does not interpret censorship as damage and routes around it. It turns out the net fucking buckles under censorship, and oppressive regimes can absolutely take things offline and prevent their people from getting access to the information they need. China's great firewall. And there's ways around it, sure. But they're not always foolproof, and there's plenty of situations where not only China, in other countries where things will be removed, things will be blocked, and it makes it very difficult to get around it. Company called publication called Decrypt published something on the interplanetary file system. So the interplanetary file system. So I'll just read what they said. So here we go. The popular web browser Opera, which no one's ever heard of, but maybe you've heard of Opera, but not very many people who can use it. So the popular web browser Opera today integrated the interplanetary file system, a protocol that distributes web hosting and file sharing across a network of thousands of computers. Opera, which has 360 million users worldwide, is the first major browser to integrate the protocol. Opera also added support for non-custodial .crypto domains, censorship-resistant domains that let users access websites that are entirely hosted on the blockchain rather than on centralized servers like Amazon Web Services. Okay, so here's the deal. If you go to a website there's two main pieces, right? That you go to the website, you type in google.com. Now google.com, there's this thing called the domain name system, right? Google.com gets converted into an IP address. An IP address is it's basically it's an I mean, Fook. I don't know if Fook can know how to explain. It's the thing that represents a piece of data on the internet, right? So, or represents a user on the internet. The Fooking, when you browse the internet, you get an IP address. That's how servers talk to you. Um, uh, so yeah, so there's two pieces. So you go to google.com, boom, the domain name system converts that human readable thing, google.com, into an IP address. Now, I don't know Google's IP address off the top of my head. What it does do is that it then converts that to a machine readable thing, an IP address, and then it serves you up the website. Now, that website is it's hosted somewhere, right? It's hosted on a server. So there's two flaws in that. One, the domain, the DNS system, that actual website, the google.com thing is controlled by this organization called ICANN, which can revoke, which then is that's kind of the governing body of a lot of stuff, on the internet. I don't know how broad ICANN is, but one of the main things they do is assign, you type in facebook.com, boom, IP address, bada bing, bada boom. They then they manage like .com, .org, all those whatever things. They help assign it. They assign those to registrars. So like a GoDaddy, you then go get your website from GoDaddy, and then you can use that to point at your web server or your website, and then you can serve up your website to users. So here's the issue: your registrar can absolutely revoke that whenever they want. ICANN can revoke things from the registrar if they want to. Your web host. So Amazon Web Services, Microsoft Azure, Fukin, Google Cloud, wherever you're hosting your website, that can also be disconnected. A government can force this company, or the company on a whim can remove this, can prevent your information from being hosted, can prevent your website from being hosted. So the internet, the interplanetary file system. Now, I should say this is early stuff. We haven't really seen this stuff battle tested, but there's this company in San Francisco, Unstoppable Domains. They allow .crypto domains. So that means you can go to .crypto. And these domains, rather than managed by any third party, they're managed on the blockchain. So the only way you can lose access to a domain is if someone can edit the blockchain, which right now, the Ethereum blockchain specifically, which right now, it's a very, very unlikely thing that can happen. There is a history with Ethereum, the Maker DAO, which was early on in the Ethereum project, when they actually, there's a big money raising venture, and they were going to distribute money to Ether, to a bunch of different projects. But what happened was that thing got hacked, and what did Ethereum do? They did a hard fork so they could return the funds to people. So that was early on in the Ethereum life cycle. Now we're not seeing that. Now Bitcoin has an even more rock solid history, but this isn't on top of Bitcoin. But you can't edit the blockchain, right? Because no one person controls it. A bunch of nodes on a network, and no one controls any one node. And there's game theoretic implications of how it all stays together. So with the .crypto domain, boom, it's on the blockchain. The only person who has access to that domain, the only person that can turn it off is the person that owns the private key. So if someone gets access to private keys, they can absolutely screw with you. But if you have your private key, no one else can and you don't share with anyone, you are in your domain. The other thing is the interplanetary file system. What it does is it distributes your file across a bunch of different nodes on all over the internet. So people sign up and make their computers Fukin nodes on the network, and they can store files. I've played with it a little bit in the terminal. They now have a Mac app. You can play with it, but you can on your own machine and serve them up to other people. It's similar, you can kind of think of it like the torrent protocol, like BitTorrent, where people have files stored, and you can't block. And similarly, you can't block BitTorrent. It's basically, it's very extremely difficult. So IPFS, similar thing. Similar idea. So I think this is super interesting because right now we don't really have or at least up until now, we don't really have the blocks in place to be able to put up a website and then have none be able to take it down. Now, there's implications of this. This isn't just a good thing. I'm not saying this is 100% a good thing. This allows anyone to put whatever they want anywhere in the world, and it not be potentially not be taken down. Now that's what some of these new technologies are allowing for, and it'll be interesting to see how this plays out. Because all of a sudden, if you can put up a website that can't be taken down, and you have illegal material on there, you have terrorist propaganda, you have child pornography, things like that. These are real issues. Well, what's going to happen? How's that going to how are we going to deal with that as a society? We're going to have to. Nowadays, the government can just tell a domain host or yo, you got to take that down. And there's still ways to hop around it, but it's tough. It's a full-time job if you want to keep a website up, and many governments want it shut down. They can really screw with you. So we'll see. I haven't seen a good example of a website that's live on one of these .crypto domains. Again, it's a new company, the Interplanetary File System. It's been around for a few years, but it hasn't really had its big moment yet. So I'm curious to see what happens with that. So I'm watching it. So okay, what we're gonna do now for a second, I'm gonna move this fucking umbrella because my computer's in the sun here, and you just give me 2 seconds, 2 shakes of a lamb's tail. Oh, when we come back, okay, so we're gonna talk about how to retire forever on a fixed chunk of money. I just thought it was another interesting Mr. Money Mustache article, and I want to share it with y'all. And here we go. We're over halfway done here, people. Let me move this umbrella. Stay right where you are. Love you all. Thank you. One sec. Okay, we're gonna turn the gain up in here. Let me move the umbrella. It's gonna be chill. Damn, I'm fucking. Whew. Smell like a foot. Damn, I'm sweating out here. It's freaking hot. Okay, we're good to go. Okay, let's do this. Okay, so here's Mr. Money Mustache, how to retire forever on a fixed chunk of money. So he has, and I'm going to link to this article because I suggest you read it if you want to know more about this stuff. Because I think a lot of people would trade, a fucking if they really knew how this stuff worked, they would trade a nicer car, they would trade eating out every night, they would trade nicer clothes for the freedom that actually saving your money early on in your life and putting it to work can do for you. I think a lot of people would make that decision. The thing is, I think it's not really it's not a well-known thing that it's even possible, and a lot of people think, oh no, it's impossible, you have to be super rich to be able to do that. The reality is you don't. If you're super smart with your money, you can, and you start while you're young, and you let the magic of compounding interest act for you, you can become financially independent. I don't say retire early, because who wants to fucking retire early necessarily? You want to keep working. You just want to be financially independent, so you're not beholden to money. You don't have to make decisions based on how much money you need to make. So here's the deal. Okay, so it is absolutely, this is what he says. Again, this is Mr. Money Mustache. So it is absolutely possible, in fact, very easy to make a chunk of money last throughout your lifetime. There is no magic or unusual risk or hope involved. It's just plain math. Even with all the complexities of the modern financial world, with its booms and busts, OPECs and Brexits, and the churning sea of changing politicians and dictators, it still all boils down to a really simple number. And we can illustrate it with this really simple example. So let's say you want to be able to spend $40,000 per year for life, and have that spending allowance continue to grow with inflation, and you never want to make another dollar from work in your lifetime. In this situation, the following 3 sentences represent the entire universe of probability for you. So remember, if you want to just be able to spend $40,000 per year in your life, again, this isn't a $40,000 a year salary. This is having $40,000 to spend. Now that's like on the order of a $55,000, maybe $60,000 salary or something like that. Because this is assuming post-tax, right? This is $40,000 in your checking account every year, so that you can spend. So here's what that looks like. He lays out the three possibilities for you. So if you retire with $800,000 in investments, you will probably make it through your whole life without running out of money. That's a 5% withdrawal rate. So that means you're withdrawing 5% of your money to spend $40,000 a year, withdrawing 5% of your money a year. If you start with $1 million nest egg, that's you will very likely never run out of money. If you start with 1.33 million chunk, that's a 3% withdrawal rate to be able to spend 40,000 a year. It is overwhelmingly certain that you'll have a growing surplus for life. Now, these statements do all depend on the continued existence of a productive human race, which continues to innovate and trade and to not destroy its own productive capacity. But you know what? In the event of a global apocalypse, you won't be thanking yourself for spending those last few years in the office accumulating a few last shares of index funds anyway. It's safer than relying on any job. So having a fat nest egg, it's safer than relying on any job because keeping a steady job depends on the overall economy remaining healthy enough to feed your company remaining solvent, and you remaining productive and useful to that company. Meanwhile, a good investment portfolio just depends on the world economy in general continuing to exist. So there's this thing called the safe withdrawal rule, SWR, and it typically it basically what lines out. You can look it up. It basically says that if you have a chunk of money and you want it to last your entire life, you don't. And he says you could even do a 5% withdrawal rate and you'll probably be okay. But 4% is like that. That's one of the rules. So again, if you're spending 40,000 a year, if you can keep your expenses to 4,000 a year, you just need $1 million to live off of. And that's a 4% withdrawal rate. So the magic of the 4% withdrawal rate is this. It's if you withdraw no more than 4% a year from a fixed amount of money, you will never run out of money because the money will keep growing with the rate of with the stock market in the world economy. It'll keep going up. So, and that includes even if you're selling. That includes and this has been back tested, and you shouldn't just back test a strategy to see if it works out because you never know what's going to fucking happen. But some truly crazy events would have to happen for this for you to not be able to live off $1 million, assuming you're spending 40,000 a year. I think that would be a 4% withdrawal rate. So here's the thing. This includes even if you're selling when the markets are down. So I think a lot of people right now, again, they think, Fukin, if anyone retiring now is absolutely screwed. Well, if you're only withdrawing 4% or you're withdrawing X percent of your money, which you probably will, maybe expenses right now, it's and you're retired, you're having to spend you're having to withdraw more than 4%. That's not the end of the world because the market is going to go back up, right? So you're going to sell at rock bottom prices right now, but ideally, not ideally, based on how this shit works, the market will go up and you will then be able to lower your withdrawal rate. So it's kind of an interesting thing. I think a lot of people don't think of, and I'll link to this. I'll link to this article and I'll link to I have a post on No Gradient where I have like 9 steps to follow. This isn't snake oil shit. I'm just reading what the experts are saying. I'm just reading what the pros are saying. And this isn't some snake oil shit. I seriously consider this is like the single number one thing I wish I could just shake every human and tell them. And say, if you are very diligent with your money. Now, I'm not saying you don't need a 6-figure salary for this. Well, you do need to do 2 very important things that make this a hell of a lot easier. Start as early as possible. Start when you're young. And number 2, be very diligent with saving your money. So starting early and being diligent will be fucking huge. Okay. So so here's what it goes. So most people get stuck on these 3 questions. What investments do I use to provide a lifetime of income? Okay, so a big chunk of my savings. So this is what people might say when they get to thinking about their retirement. So a big chunk of my savings are in a 401k or pension locked up until I'm 59. How do I retire at 35? Another question: how can I pay for U.S. health insurance on a $3,300 per month budget when I've heard monthly premiums can exceed $1,200 per month for a family of 4? The great news is that there are easy answers for. Okay, so I didn't do all 3 of these. All 3 of these questions, but they're just not widely known because true early retirement with no backup income is such a rare field that very few people write about. So let's bang out those answers right here. As always, I suggest that you need one thing: a generous bucket load of low-fee index funds. It can even be a single index fund if you want to keep it even simpler. Vanguard's VTI, Total Stock Market Exchange Traded Fund. Whether you own these funds through your company's 401k plan or your brokerage account of your choice or a Vanguard account or through an automatic management service like Betterment, which I also recommend, as I do, doesn't matter. What matters is that you are buying pieces of real profitable companies which pay dividends and appreciate over time. Okay, so a big thing here is low fee index based investing. Don't give your money to someone that's going to charge you high fees and who can fleece you on those fees and try to beat the market. Just do low fee index based investing. Look it up; it's legit. Okay, so let's just walk through this. Okay, let's just say you're 35 years old. You've saved exactly $1 million and you've handed in your resignation. At this point, you'll probably have at least now $1 million. That's a lot of fucking money. I'm not saying this isn't a lot. Ooh, gotta keep my voice down. Oh yeah, you're good. Yeah, you're all good. I love it. I just dropped the F-bomb and she's wondering if her kids are being too loud. No, they're all good. Okay. So yes, maybe you don't save $1 million by the time you're 35. Maybe you save $1 million by the time you're 45. Maybe it's by the time you're 50. My whole point is that you don't just need to work till you're 65, and especially a job you don't like, and wait till you retire. If you start early, you can get on this early, and you can be financially independent sooner. You just really got to think. You got to think about it now, and you got to think about how to fucking spend your money, how you're going to spend your money. Okay, so at this point, you will probably have two. So you've just quit your job. You're 35. You have $1 million in the bank, and if you're not 35, call it 45. But this is just walking you through it. At this point, you will probably have at least two chunks of money: a normal chunk, also known as a taxable account, and a retirement chunk, perhaps a 401k, IRA, or pension. Right now, that money in the latter group, you can't spend till you're older. Well, you say I don't have access to that money, so what can I do? Well, you can access the money in your taxable account. So here's the deal. So let's suppose this is what he says. Let's suppose it's divvied up, $500K in a taxable account, Vanguard, Betterment, checking savings. That's money you can access right now, whenever, penalty free. Then there's $500K in retirement accounts between 401k, IRA, pension, etc. On your first day of freedom, you log in your account, find an option of what to do with dividends, and set those to get automatically deposited into your checking account. So dividends, you get paid for owning stock. That's companies distributing money to shareholders. So right now, the VTI fund happens to pay 1.89% annual dividend, which means that the $500,000 account in the taxable your taxable account will pay $9,000 annual dividends straight to you. So rather than reinvest those dividends, you're now drawing down. So you want to just uncheck have those dividends automatically invest in your checking account. Okay, then if you're shooting for $40,000 of annual spending, simply set up an automatic monthly withdrawal of an additional $31,000 per year. So that's $2,583 per month to be sent to your checking account, which is set to automatically pay off your credit card, which you use to buy your groceries. Okay, so that's the magic of okay. So he says, but won't I run out of money if I do this? That's the magic of early retirement math. The answer is nope, because check out how this plays out. Because of those withdrawals, your account will lose a few shares every year, but because of natural stock market growth, your account will be fighting back and each share will be worth a bit more. Thus, your money lasts much longer than it would even if you were just keeping it all in a checking account or stuffed in your mattress. So a quick spreadsheet simulation of this drawdown reveals that your account survives almost 23 years, at which point you are 58 years old, almost eligible for penalty-free withdrawal of your true retirement money. So again, penalty-free withdrawal means you don't have to pay. Well, you do have to pay income. So this is when we're kind of getting into the nitty gritty. I don't want to get too much in the nitty gritty here, but we'll say if you do a Roth contribution to like an IRA or a Roth contribution to 401k, when you withdraw, that money's already taxed. Anytime you see the word Roth, all it means is the money's already taxed. When you put that money in the account, when you withdraw it, you don't have to pay taxes on it. It's a magical thing. Okay. So, but during this whole time, that other $500,000 in your retirement account grew untouched and untaxed, and it's now worth $1.2 million even after accounting for future inflation. In other words, you have way more than enough to live on forever at this point. Heck, even if you are stuck with $1 million house occupying a huge part of your net worth, you can convert that into livable money, sell the house, put the cash into index funds, and use the resulting cash stream to rent a spiffy but reasonably priced house or apartment in the lovely walkable area of your choice. If you're stuck in the world's most expensive medical care market like I am, the most profitable investment of all may be salads, bikes, and barbells, because these virtually eliminate the lifestyle diseases that trigger about 75% of U.S. healthcare spending. But even so, most people choose to insure against surprise medical bills, and people with existing medical needs depend on help with those costs. So he goes into some of the healthcare stuff. I'm not going to cover some of the, he just talks about he going on healthcare.gov to get a low, to find healthcare and to show that it's actually not that expensive. You can shop around. Health insurance is expensive, but he was just given some specific examples that he was able to find in his market of Colorado. So I'm not going to go too much into those details. But okay, he also says stock market crashes are never permanent. In the long run, the market always goes up. So all that happens during a crash is that those few shares that you do sell during those brief times when the market is down will hurt your account balance just a bit more. Within a year or two, the market is back up and your remaining stocks are more valuable than ever. If you want even further reassurance, you could just choose to spend a bit less during this time. As for your cost of living going up faster than inflation, it rarely happens. And if it does, you can adjust by spending less in other areas. Most things are in your control, especially if you take a big picture view. You can shop around, move, and alter your lifestyle in a million different ways. And in fact, this is really good for you. So this is another thing. I think people talk about, financial independence, retiring early. If you have $1 million in the bank at 35, you're probably not gonna get in a situation where you're never earning another dollar. You could take a job, like a dream job that you don't care about the money. You can now work at that job. Uh, if maybe you want to work at fucking like a trampoline place and like one of those sky high places, and that's your dream job. Boom, great. You can make money that way. You can make money. You can now choose what you want to make money from. You can start your own business. Granted, you can't invest a shit ton in it if you want to, be on the safe side. But you can also fucking do a million different things, and still get paid. So this is assuming you don't want to make $1 to live off a fixed chunk of money. Which the reality is, you will be fucking. You're gonna want to work. Probably you're gonna want to do something, and get paid for it. Even it's a little side thing. Make an Etsy account. I don't know. Figure it out. Okay, so um, uh, as it for your cost of living, let's see. You can shop. Okay, so standard retirement advice is based on protecting people from any form of hardship or change, which is completely counterproductive. In the right quantity, these are the backbone of a good life and the fuel for personal growth. Without them, you will melt into a whining puddle in front of a television that endlessly blares Fox News. Hilarious. Every financial advisor, even Betterment, seems to suggest lots of bonds. Why does Mr. Money Mustache only hold stocks? So this is why I say he only holds stocks. This is what he says. The quick answer is that stocks earn more money on average, especially right now in 2018. So this is what Jack brought up last on the show, is like, is it even worth it to hold bonds? So this is what Mr. Money Mustache says. Especially right now in 2018 with bond yields so low. Sure, stocks are more volatile, but volatility only bothers fearful people who look at the stock market every day and fret when it jumps around. As a mustachian, you can do this. Mustachian is what he calls like his cult following. I guess I'm a mustachian. Lower stock prices are simply a temporary sale on stocks. For example, in the story above, I assume $40,000 annual spending rate, which is way more than almost anyone really needs to live well here in the U.S., especially once your kids are growing. I completely ignored Social Security. Again, yeah, that's assuming the government's not giving you any money, which will benefit most people at a level between $1,000 and $2,500 per month for a big portion of their older years. I ignored any incidental income or inheritances or profits you might make on selling your house someday, and the list goes on. So that's the line in the sand. Although I personally think working hard almost every day after your retirement is good for you, it also is completely optional, and you don't have to earn any money at it if you don't want to. A chunk of money is a perfectly good retirement plan, and the math doesn't care if you're retiring at 5 years old or 85. If you get the numbers right, you're set for life. So I think a lot of people, they just don't think that way. They think it's impossible. They only, so I encourage you. I thought that was good to share, especially during these times. Just relax, think about it. I'll post that in the show notes. Really think about how you spend your money. And I think what happens is, when you shift your thinking on how you spend your money, what happens is, when you realize the power of compounding interest and the power of investing your money and saving it and how it grows, all of a sudden that fucking $20 cocktail that you're fucking buying every day when you were going out, or that fucking those nice clothes you're always buying, or that nice car, all of a sudden you're like, wow, I just bought a fucking $50,000 car, or $40,000, hell, even a $30,000 car. You buy a used $10,000 car. What are we talking about, people? It does the same shit. It's got AC, and it takes you where you need to go, and a heater. That's all you fucking need, okay? So I think if you think about it that way, it really shifts your perspective on money, because the power, you save your money right, you invest it properly, especially at a young age. A little tidbit here. If you start saving, let's see, if you save, I forget the numbers off the top of my head. It's in the post, but if you basically save $1,000 a month between the ages of 25 and 35, excuse me, let's start with 35 to 45. If you start saving when you're 35, if you start saving $1,000 a month between the ages of 35 and 45, so that's 12,000. That's 12,000 a year. Between the ages of 35 and 45. By the time you are 65, that money will grow into 750,000, assuming a 7% growth rate. 750,000 you will make by the time you're 65 if you save from 35 to 45. Now, if you save from 25 to 35 and save $1,000 a month, it's the same amount of money saved. Again, 12,000 a year over a 10-year period, 25 to 35. If you wait, again, if you do it, start 25 instead of 35. By the time you're 65, instead of 750,000, it will be worth 1.5 million. assuming about a 7% growth rate. Now, that's insane. What does that mean? You've contributed the same amount of money. All you've done is you shifted that. You started saving 10 years earlier, and now you have twice as much money. It's absolutely insane. The power of compounding interest is absolutely insane. The sooner you start, the fucking better. Okay. So we got a couple things here. So we're gonna talk about a little work from home stuff. Um, Benedict Evans has some interesting stuff about some habits like that we might keep post fucking post pandemic. We're going to talk about a fucking Marc Andreessen's tweet storm, and then we're almost wrapping up here. Then we're going to take some questions and comments. So that's coming up. So any questions, comments, feedback, fact checks. If I was wrong about anything, Charlie Finch Finley will give that shit to me. So get your questions ready now, and I'll go through rapid fire because I'm already going fucking a shit ton of time. I have to think of pee-pee, and I might think of pee-pee while I'm on the show. I've done that before, but we'll see. So, but maybe we can finish before then. So that'll be kind of the stop, the line in the sand. Okay, so here we go. So there's an interview I referenced a couple. I think Shooting from the Hip number 5 or something. There's an interview that Ben Thompson did with the CEO of Automatic. Basically, it's a company that's completely remote, completely work from home. It's been that way for several years. So as a lot of people are starting to work from home now, what you're seeing something similar to what movies look like. And this is something that Chris Dixon talks about, and it's been quoted by other people. But the case is that when movies first came out, what did they do? They filmed plays. They filmed plays. They didn't think you could do new things because you now had the film as a medium. So they filmed plays. They filmed a stage. Then they realized, oh wait, the camera can move. Then they realized, wait, we can do different scenes. We can go to different places. We can go on site. You did all these new things. So what are we seeing now with work from home? Well, a lot of people are doing the same shit they were doing in the office. Now they're just doing it over Zoom or doing it over video calls. They're having meetings or phone calls that they normally meet in person. This is the equivalent of recording a play, right? So this company Automatic, the CEO of Automatic, what they do, they don't have fucking video call meetings where they give company updates and shit. What they do is everything is text-based. They have an internal, basically, blog forum platform. Every single company update is all in text. It's searchable, it's savable, it's shareable, it's readable, it's boom, it's easy. You don't have to wade through your fucking boss doing some 60-minute update on a fucking Zoom call. It was a miracle he even got the fucking thing able to work. So what you're seeing, what this company does is, it's think of, don't just work from home and do the same shit you were doing before. Think of how you can make it better. Think of how you can improve what you were doing before. Don't just do the same shit you were doing in the office. So that's just an interesting thing to think about. And also, people say that since this company's been fully remote, they do meet up like once a year or something, but it's been fully remote, so they've learned a thing or two. One of the interesting things they say is that their company is actually, the information is less siloed because one of the things about working in an office, like, oh, the idea share, and people were walking by, and people were poking their heads in, water cooler talk and all that. He's saying that these meetings that used to be in conference rooms that were only some of the company attended, or only some of the people cared about, or maybe some people were on lunch break, blah blah blah. Now it's all text. It's all text based. It's all searchable, and it's all shareable, and you can find out things about your own company that you work at if they move to a system like this. You can get actually more insight into what's going on because people are sharing more information, and it's much easier to wade through. Wading through videos is a nightmare. Video calls are a nightmare. Synchronous work meetings are a fucking nightmare. They're dog shit. Generally, you need one meeting a week to make sure everyone's still alive, and other than that, you're good to go. Okay, so think about that as you're working from home. Think how you can improve your processes, not just duplicate the processes that you had in the workplace. Okay, here we go. So here's the thing. Benedict Evans, he has a newsletter. This is his newsletter number 329. He's one of the best thinkers, in my opinion, in tech. I look forward to his newsletter every week. He releases it once a week on Mondays. March 30th, 2020. This is a newsletter from him. So he says this: Amazon is hiring 100,000 more people to handle demand, and Instacart is adding 300,000. He says, I keep wondering how much of this forced adoption will stick once we get back to normal. Some things that were inevitable will be accelerated, but there's now a mass experiment for lots of other fields where physical retail is acting as a logistics endpoint. Converting it to delivery is mostly a unit economics question, and that will vary by product. But a lot of retail is about more than that: service, discovery, curation, or just leisure. So it all fucking I went to Fukin Michael's the other day, pick up some Fukin art supplies, and Fukin. And this is my woman doing the art stuff. She's doing some remote paint night shit or something. God bless her. I don't know if I'm going to do it. Probably won't. But here's the thing. It felt, a lot of this is, I'm sure you've been ordering online more. It felt archaic to get into a car, turn on a Fukin engine, burn gas, drive around, drive to a store, pick something up, 6 feet social distancing. We kept the doors open. We opened the trunk. We said, put the stuff in the back. We floored it. We got out of there. Don't worry. We kept it chill. But it feels archaic. Ordering online, I'll wait a day. I'll wait a few days. Amazon Prime, it's absolutely insane. I'll wait a day and not have to get in the car. Think of the time cost. If you drive out somewhere 20 minutes, 20 minutes there, 20 minutes Fukin back, it's 40 minutes. Not to mention when you get in the store. Every time I go into a store, I say, these are a nightmare. I fucking hate going into stores. You can never find anything. I always have to ask someone, excuse me, where's the mayonnaise? It's a nightmare. I hate it. I hate it. Boom, order online. Someone comes to you. You don't have to get in a car. You don't have to travel. Bada bing, bada boom. I love it. Anyway, so he goes on to another thing. He says the UK has picked 11 suppliers for video primary care consultations during COVID after 48 hours. A lot of conventional processes are being short-circuited in the emergency. Again, how much will stick? If we can see how fast we can improve things now, maybe we'll be like, yo, why did it take 6 months to prove a Fukin video call solution before when the UK did it in 48 hours? So another thing he talked about, so Apple is officially blocking all third-party cookies in Safari, which is a sizable chunk of web browsing and a much bigger share of browsing by the people that advertisers really want to reach, because advertisers want people with money. Typically, people with Apple products have money. 80% of U.S. teenagers, and the people they want to reach, young people. 80% of U.S. teenagers have an iPhone, for example. This still seems somewhat invisible in tech, even before current events, but totally changes how targeting and attribution work. It's also a win for privacy, but at the expense of competition to Facebook and Google, which don't need cookies in the same way. It also makes it significantly harder for online publishers to make money for advertising. So here's the thing. Cookies, they allow you to store, they allow websites to store information on your browser, so they can kind of identify some things about you or save state about your browsing session. Safari is blocking all third-party cookies going forward. So, and one of the points Benedict Evans constantly makes is that, yes, this helps privacy. This allows prevent advertisers from tracking you across different websites. But what it does do is it makes Google and Facebook even stronger, because Facebook has its own, its website where they have a shit ton of information about you. They know who you follow, they know who you like, they know what you read, they know the things you click. They can serve advertisements based on that. They don't need your other data, though they would love to get it, but they don't need it. Same with Google. They know your search history. They know the things you like to click on and the things you don't. They know what you're most likely to click on. They're not as affected by this. And Google is going to block third-party cookies in 2022, I believe, in Chrome. So yes, it's good for privacy, and it makes Google and Facebook more dominant. Again, there are no solutions. There are only trade-offs. Wait, is that? Yeah, that's Pook. I forgot his name that said that. I said last week on the podcast. But anyway, so yeah, privacy, woo, no third-party cookies. Yeah, that's a good point, and I think it's valid, but everything's a trade-off. Now that makes Google and Facebook even stronger. New York, for example, he gives one example of the New York Times. This hurts their ability to advertise because they don't know what you're doing on other websites, so they can't track you and serve you up content that you might like. They're less likely to click their ads. Now, to be fair, New York Times specifically, they have a subscription model, and they're doing pretty well compared to a lot of publications with it. But it's just something to think about. There's two sides to every coin here. Okay, so this is Balaji S. Srinivasan. Okay, we got a couple more things, then we're going to take questions. Charlie, don't hit me with those questions yet, because as soon as I see them, I get triggered and get taken out of my flow. So we got a couple more things here, and then we're going to talk about we're going to get to the questions. I'm going to close with one more thing. Shooting from the hip, number 7. Thanks everyone for joining. Okay, here we go. So Balaji Srinivasan, I'm sure I'm butchering his name. Again, assume I butcher all names. He was one of the early people on that was like, yo, this is a pandemic. This is a big fucking deal. We need to fucking batten down the hatches. So here's what he said in one of his tweets yesterday. He said this: I don't think people realize that there is no normal to go back to anymore. At absolute minimum, supply and demand has been reallocated across the economy, with travel and events zeroed out, remote work and masks to infinity. Virus permanently changes public behavior, supply chain disruption just starting, more still en route. So best as I can tell this morning, we have a pandemic crisis, a supply chain crisis, a demand crisis, a labor market crisis, an equity market crisis, an oil price crisis, a brewing bond market crisis, a developing currency crisis, potential housing market crisis. He quote tweeted someone else there. So even if the virus did vanish in a puff of smoke and everyone went back to work, the behavior of billions of people and every country has been permanently changed. Demand won't quickly come back. Borders won't easily reopen. International relations won't be the same. China is the best case scenario for at least a new normal. But every citizen is being tracked. Borders have been closed. Demand for many products is way down. Daily behavior has changed. So he says there won't be a new normal. And to him, I say, when has things ever been normal? Take any decade, we wouldn't say, oh, that was normal. Nothing big fucking changed. This is the way civilization works. Every fucking decade, shit hits the fan. Fucking 1910s, World War I, 1920s, fucking Roaring 20s, 1930s, fucking Great Depression, the 40s, fucking World War II. The fucking 50s, Cold War, 60s, Civil Rights Movement, fucking 70s, Ebola, when that shit first hit the fan, the 80s, the AIDS epidemic, 90s, the World Wide Web, fucking 2000s, 9/11, the 2010s, the Snowden leaks, not to mention global financial crisis bled into that, but that's still the 20. So my point is, there's always things every decade that we can say there will never be we can never return to normal. Yes, there's no such thing as normal. There's never been a such thing as normal. Normal is something that happens for a small period of time. And then there's a new normal, then there's a new normal, then there's a new normal. So I'm not, in the same way, like, I don't think the Depression, World War I, World War II, these were all, Ebola, the AIDS epidemic, these did change the way we thought about things, certainly. And maybe you could say this is bigger than all those things, but those were pretty fucking big things that I just mentioned. I don't think there's going to be some crazy, huge world. Excuse me. I think there will be big changes based on this, but my point is that we're used to that. We've already gone through it, decade after decade after decade. Big shit hits the fan, and guess what? Life goes on. So I just think I just thought it was a little interesting, a little tidbit I want to talk about. Okay, so we got Marc Andreessen. We have a tweet storm from him. This was from 2014, September 25th, 2014. Marc Andreessen, he's kind of famous for inventing the tweet storm. He's one of the head honchos at Andreessen Horowitz, who that's Benedict Evans, also used to work there, who I quoted earlier, who has the newsletter. This guy's an absolute cobra. He's an optimist. I love listening to him speak. So anyway, he had an interesting tweet. 17 tweets rather, 18 tweets, and he talked to, and this was in 2014. And it was telling. So we're gonna start. He's talking about startups. So he says this: cash burn rates at startups recently have sounded a vivid alarm. Okay, I said at the time that I agree with much of what Bill says, and I want to expand the topic further. New founders in the last 10 years have only been in an environment where money is always easy to raise at higher valuations. That will not last. When the market turns, and it will turn, we will find out who has been swimming without trunks on. Many high burn rate companies will vaporize. High cash burn rates are dangerous in several ways beyond the obvious increased risk of running out of cash. Important to understand why. First, high burn rate kills your ability to adapt as you learn and as market changes. Company becomes unwieldy, too big to easily change course. Second, hiring people is easy. Layoffs are devastating. Hiring for startups is effectively a one-way street. Again, can't change once stuck. Third, your managers get trained and incented only to hire as answer to every question. Company bloats and becomes badly run at the same time. Fourth, lots of people, big shiny office. Here we go. Yo, Charlie, hit me with those questions because we're almost done with this, and I want to be ready for these questions, comments, anything that was fact checked, anything I was wrong about. Charlie, dump it on me so I can riff through it, and then I'll end with another thing. Then we'll go. Okay. Anyway, so I'm gonna finish this tweet storm. Fifth, more people, lots of people, big shiny office. Oh yeah. Here we go. Third. Okay. Third, your managers get trained and incented only to hire as an answer to every question. Company bloats and becomes badly run at the same time. Fourth, lots of people, big shiny office, high expense base equals fake. We've made it feeling removes pressure to deliver real results. More people multiplies communication overhead exponentially, slows everything down. Company bogs down, becomes bad place to work. Sixth, new money becomes harder and harder. You have a bigger bulldog to feed, need more and more money at a higher and higher valuation. Therefore, you take on escalating risk of a catastrophic down round. High cash burn startups almost never survive down rounds, vaporize. Further, to get into this position, you probably had to raise too much money at too high valuation before. Escalates down round risk further. Seventh, even if you can raise an up round, you are increasingly likely to incur terrible structural terms like ratchets to chin the bar. That nice hedge fund investor willing to hit your valuation bar, imagine him owning of your company after a down round? How nice will he be then? When market turns, M&A mostly stops. Nobody will want to buy your cash incinerating startup. There will be no plan B. Vaporize. Finally, there are exceptions to all this, but if you're reading this, you're almost certainly not one. They are few and far between. 18, worry. Bada bing, bada boom. Okay, so that was Marc Andreessen just being a cobra. Okay, so we're gonna take some questions and comments. Charlie, thanks for thanks for Charlie hitting me with some questions and comments. We got we're gonna end with just a little teaser. We're gonna end with the shock cycle. This is something from Morgan Housel, who I've quoted before. He talks about how all these things work. When bad news comes, then the good news we ignore. Anyway, we're gonna talk about the shock cycle. It's just a little thing I want to end with. And we'll end with that. But first, we're going to do these questions and comments. So, Charlie, thanks for getting these to me. Let's see what we got here. Let's see if I was wrong about anything. Let's see how fat. Oh, shit. Jesus. These are a lot of questions. This is going to take a while. Okay, I'm going to go fast on this. We might have to work out a better system for this because in the future, holy shit, I'm reading okay, Buzz, if you could get one thing airdropped to you right now, what would it be? Can be real or faked. Okay, you're done. I don't have time for those questions. I appreciate you, Jack. Oh, you trying to airdrop? Unless you're trying to send me something. I don't know, dude. I love you. That's all I know. Okay, nice things. Is there any consensus on what conditions need to be met for societies to return to normal? Lots of talk about containing the virus. So this is from Matt Buckley of Nice Things. He builds good software. Okay. Lots of talk about containing the virus, but not a lot of clarity on what to do once that happens. Is there any consensus on what conditions need to be met for societies to return to normal? Okay, so we did talk a little about this return to normal. I don't think there's consensus right now. I mean, think of it this way: the possible range of options, both negative and positive, is still super wide right now. That band is super wide. So I'm not. I haven't seen consensus. I haven't seen consensus on anything, and I think anyone saying anything right now conclusively in an unprecedented time is a hell of a way to be wrong or steer people in the wrong direction. So this is an unprecedented time. We don't have a formula for this, so we're figuring it out. Okay, Snake, what do we got? It's from my sister. I also wonder what things won't ever be considered normal again, which then becomes a question of what societal transformations are taking place because of the virus, if any. And if there are positive societal transformations, what do we think they are? Well, okay. One of the positive societal transformations I think right now. Okay, first of all, I think work from home will be absolutely huge. And I think it's a very, 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 very good thing for multiple reasons. One of which, no longer need a commute time. When I started work from home, I had 2 hours saved. Boom! All of a sudden, not just 2 hours saved, that as well. Don't have to pay. Ganaj Fukuncho talked about. He said this. He said, working from home actually encourages people to invest in their communities because they don't just go into a city and go into a skyscraper and work there. What do? They're working from home. They're working in their communities. They're spending more time in those communities. There's more time at home. There's more time hanging out with your neighbors. There's more time being in the place around the people around your family, friends, neighbors. And that's a very powerful thing. Granted, people do counter and say, oh, the office, you get to make friendships and like shit like that. And and all that's fucking great. And by great, I mean, I think it's okay. Listen, I've worked in office and I've worked remotely. And everyone's going to have a different experience with a lot of this shit. But I will say, being in office, it is cool on some level, but it's also not cool on a lot of level. On some level, you got to have a lot of pointless fucking conversations. And God bless. This is the proverbial. My last companies I worked at, I had an office were the smartest and most brilliant people in the world, and I would never trade it for anything. Blah blah blah. Everyone has to say it when they leave. Anyway, love people I've worked with in the past. But it's a lot of fucking wasted fucking time. Like you're just trying to get a drink and then boom, you're stuck in a conversation. It's like, okay. So my point is, I think there are actually one of the big things I think will encourage more working from home. What does that mean? People have more time on their hands. Okay. So Trump's recent decision to restrict companies from exporting supplies pertinent to virus treatment prevention, e.g. masks by 3M. How will this affect international relations? Nice. Okay. People are hitting me with questions that are like, how will this affect? Okay, so the reason he was able to do this, there was some War Powers Act, and here's what I'll say about him doing that. I think it's perfectly reasonable for a country to look out, especially in a time of crisis, to look out for the best interests. Now, the 3M is an American company. I think it makes sense for him to have for the United States to actually do that. Put it this way. Whether I'm not going to say yes, it's a categorically good thing, or no, it's a categorically bad thing. What I will say is it's a reasonable thing. It's a reasonable thing to do, to say, the United States has a big fucking issue right now, and we're going to pull every lever we can to protect our citizens. Just to blow this up, I mean, during World War II, the U.S. government did a whole bunch of fucking shit that we would think today would be absolutely nuts. Price fixing, salary capping, forcing suppliers to make certain things. Like, this isn't unprecedented stuff. This is an unprecedented time, certainly, but a lot of the stuff we're doing now is not unprecedented. There are reasons the executive branch has some power to do these things, because sometimes the government needs to do fucking big emergency things. So I think it's a reasonable thing. Well, how will it affect international relations? Shit, man. Shit, that's above my pay grade. I don't know. I certainly think it'll make people think. How's this? I think it'll make people think a lot more about their supply chains. About potentially bringing more stuff, not just home into their borders, because that's not realistic. A lot of supply chains span there's like 2,000 items that go into a car across dozens of countries, or like electronics supply chains are huge. These things are deep. Everything touches everything. It's a globalized world, so you can't just say bring all the manufacturing back. That's not how it works. If you did that, it would be absolutely catastrophic to your economy. But I do think people will think more about maybe ways to make their supply chain less risky. I do think when it comes to emergency supplies, governments, there will be, I think, a 5-year period of governments stocking up on the supplies that they are desperately needing right now. Think respirators, think masks, think surgical equipment, all this stuff that we're running out of. There will be a 5-year period of stocking up. So rich governments will never be caught short this type of shit again. And we've talked about this before. So I think that'll be a fallout. Okay. Boss, I assume this is my sister. I will say 40,000 a year is very tough to support yourself on, much less kids, dogs, cats, plants. Nice. So 40,000 a year. Again, this isn't a 40,000 a year salary. This is 40,000 a year in money you're spending. So a lot of the thing that Mr. Money Mustache talks about, and I should have included this, and I appreciate you bringing this up, Snake, is that the thing is, his part of his whole ethos is that we throw money away and we spend money on the wrong thing. So if you read more of his literature and you kind of buy into what he's saying, $40,000 a year, again, that's post-tax. That's money actually in your account, which is equivalent to, I don't know the official numbers, but based on maybe a 55 or 60,000 a year job, which you can live on. People live on that. And also moving to a place that you're not paying a shit ton in rent, or not, renting a house that isn't fucking super expensive or some shit like that. He's saying there are knobs you can pull that you mostly wouldn't think about, like, cooking, not spending a shit ton of money on your car, cooking, not going out to eat all the time. So part of it is, $40,000 a year doesn't sound like much. Part of the Mr. Money Mustache ethos is you don't need that much money, because you're not going to. When you realize you don't need to spend money on a lot of shit that you currently do, it shifts your thinking and allows you to live a good life even with a small amount of money. So I'll say this, personally, I really think about how I spend my money, because I really, you don't need. I don't feel, compared to, I mean, when I was making the money that I was making at my regular job, I wasn't spending nearly as much as I think your average person in that situation would. Why? Because I think I'm a big believer in diminishing returns. You don't need that much to have a fucking, a good life. You don't need to spend that much money to have a good life. You need Fukin. You need a couple pairs of clothes you like. I wear the Fukin same t-shirt every day. You need like a couple different pairs of shoes. It's like, what do you Fukin need? You don't need to spend all this money on nice fucking things, on nice clothing, on nice cars, on a nice Fukin house, all these tchotchkes in your house. You just don't need it. You don't need it. So yes, 40,000 a year doesn't sound like a lot, but I encourage you to go read his stuff, because it's interesting stuff. Okay. But if you get one thing airdropped to you right now, would it be, can be real? Okay, nice thing. Is there any consensus on what condition? Okay, hold on. I'm rereading some of this stuff. Sorry, they're duplicated. I think we need to clear as much money as we think, but I do think 40,000 is a tough number to swallow when it comes to living off for many years and having a safety net. Okay, boom. Okay, those were all the questions. Respect. I appreciate it. Thank you for chiming in. I don't know if I missed any here. Thank you for chiming in. What are your thoughts on? Yeah, I think we're all good. We are good to go. Okay, Charlie, you're the man. You're a beast. Thank you everyone for asking questions. This was how fucking long was it? Oh, 2 hours, 2 hours and 4 minutes. For some reason, I thought we were going way fucking long. 2 hours and 4 minutes. It's 2:04 p.m. Eastern time right now. Thank you everyone for joining. Thank you for your questions. Again, we do this every Saturday, Eastern time, noon Eastern, 9 a.m. Pacific. This was shooting from the hip number 7. I'm going to come in. I'm going to talk about things I'm interested in. I'm going to talk about things I think you're going to be interested in. I'm going to talk about things that I'm then going to link to in the show notes so you can look at this stuff for yourself. And I encourage you to join in the chat if you can. There's also you don't need to listen. I love all the homies that come out live. I really appreciate it. That's epic, and I love that you're asking questions. It makes it super fun for me, and hopefully you call me out on my bullshit. We all learn more from that. But you don't need to watch this live. You can watch the stream later. That will be it will be on YouTube, so you can rewatch this shit. You're good to go. Oh shit, I forgot one more thing actually. The shock cycle. I forgot after the questions and comments. Okay, the shock cycle. We're going to end quickly. So I've already kind of said my ending piece. I'm not going to repeat all that. But you can also get this wherever podcasts are sold. If you want to get all the show notes, I got fucking 18 pages of notes. If you want to get all the show notes, you can be a supporter on Patreon. We got a link in the right below that like button on YouTube. You got in the notes on in the description of the YouTube video. You can get the full show notes because maybe this will help you. Maybe you want these show notes and you can be better informed about if something you want to dig deeper into. You can look at exactly what I'm saying. Also, it's searchable, so you can have a lot more links in here. Anyway, okay, so we're going to end with this now that I've done all the housekeeping stuff. We're going to end with this, the shock cycle. So this is the shock cycle by Morgan Housel. So here's what he says. He says at first you don't see bad news. So think of this in the with regards to the pandemic. Okay, he says this: at first you don't see bad news because it starts small and isn't reported in traditional outlets. A few experts chat amongst themselves, but word has yet spread. Then you ignore the bad news because even once it's reported, it's easy to dismiss if you're not familiar with it. An unfamiliar threat is hard to distinguish from a threat that people are overreacting to. Then you deny the bad news because at some point you can't ignore what's being reported, but claiming the numbers are wrong or out of context is more comforting than admitting they're about to hurt you. Then you panic at the bad news when you realize the threat is real and you need to make up for lost time. You compensate for previous denial with worst case scenario predictions to reduce the odds of being caught off guard again. Then you start to accept the bad news. Expectations are powerful, and people can adapt to bad news even when it's personally painful. A little bad news you didn't expect can feel worse than major bad news you knew was coming. Then you don't see good news. So this is when it flips. So I'm not saying that the pandemic has flipped, and I don't think he's saying this either. He's just saying people go from one extreme to the other. So when the good news starts coming out, so here's this. Then you don't see good news. We got good news coming out of Italy. It looks like that curve is flattened. Then you don't see good news because people are nervous to report optimism out of fear of looking oblivious. Good news can coexist with bad news, but when people are losing their jobs or lives, you can appear reckless for discussing signs of progress. You can look like a tone-deaf dick. He didn't say that. I did. Then you ignore good news because you're once bitten, twice shy. Avoiding further downside becomes such a focus that you lack the mental bandwidth to even recognize good news. Then you deny good news. You're so attuned to risk that you reflexively think good news must be wrong or out of context. Anyone promoting good news is criticized by the masses who enjoy safety in numbers. Then you realize you missed the good news. In hindsight, you realize things turned a corner while people were most certain about how bad it was. You look back and can't believe how obvious it was that people were too pessimistic and can't believe the clear signs of improvement were. Then you accept the good news, realizing that risk has receded and you can once again enjoy the fruits of progress. Then you abandon your attachment to bad news as good news dominates the media and optimism becomes socially acceptable again. Then you're right back to where you started. So I think the lesson here is don't be too optimistic. Don't be too pessimistic. Try to keep it real. Try to be calm. Try to view things with a level head. Try to put them into context where things have happened before. I always think it's super helpful to think that way. Don't just look at things in a vacuum. Look at, okay, when has society dealt with a problem like this? When has someone dealt with a problem like this? Fukin, I'll end with this. Will Smith, Fukin, Kids' Choice Awards. He said two things you need: run every day and read. And he says this because if you can run every day, you tell that little voice in your head that tells you to stop running. If you can tell that voice to shut the fuck up, then you will be successful, because that's the voice you're ignoring, and that means you keep going forward. And the other thing is, he said read, because there's not one problem that you dealt with or ever will had to deal with, that has not been written about by someone else and solved by someone else, and someone else has gotten through it. It may hurt, it may be tough to get through, but you will get through it. Learn from what other people have done. Anyway, thank you everyone for joining. This was Shooting from the Hip number 7, and it has been epic, epic, epic being here with y'all. Love y'all. Really appreciate everyone hanging out, and this was fun. See, then towards the end of the show, I just start talking to myself, because I don't want to say bye to y'all, because this is all super fun. But I'll end the way I can. Come on, shine, you're walking now. Quit your belly aching, shine. Come on now. Come on now. This was Dick Lucas, Charlie Finch Finley, No Gradient Podcast, NoGradient.com, Shooting from the Hip, number 7. Thank you for riffing with us. Stay woke, stay golden. Call your Grammy, call your Grampy. Make sure they're all taken care of. Make sure your fam's taken care of. Take care of yourself. Thrive in this environment. Be anti-fragile. Do what you can for yourself and others. No Gradient. Shooting from the Hip, number 7.